This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo's in here. Very interesting newspaper segment coming up.
Oh, I'm looking forward to that.
Looking forward to 45 minutes. We lead with Paramount.
Oh, boy.
Mr. Diller, I thought of you yesterday. I had a beverage of my choice in my hand.
Yep.
And there it is. He's back. Were you surprised?
I was, actually, because he's kind of been, kind of low key over the last
like old Hollywood.
5 to 10 years. But this is the past replaying itself. He made a big aggressive bid for Paramount back in the day, lost out to Sumner Redstone. So
we'll do that today. It's sort of tangential to what's going on. To me, and we're losing the plot here, it's a holiday lengthened work week. And I'm sorry, the jobs report on Friday really looms large. I mean, we got all these things.
Well, I'm going to be here. I don't know about everybody else, but I'm going to be here for this jobs report. I mean, Lisa might be taking it off going to the shore or something, but I'm going to be here because I think that non-farm payrolls, we're looking at 200,000 jobs.
Breaking under that? Yeah,
and that's below, we were at 272 last month, so a little bit of a weakening there. And we got jolts today, so we'll keep an eye on that.
Yeah, right on 200,000 today. But really, the economic data starts in today. Michael McKee ramped up before, like he does the data here into July, and then he starts his Western tour.
Yes.
He's like Lewis and Clark. He's got a coonskin and cap.
He's got to start packing
canoes, he goes out there, they sit around a campfire and talk economics.
I know, that's how he does it.
That's how he rolls. And the way we're going to roll today is to look at a little bit of the politics. Wendy Schiller scheduled to be with us. And a lot of equity talk, particularly in the 9 o'clock hour, about this great bull market. Futures, negative 22. We're on YouTube. Search and subscribe. Bloomberg Podcast. Paul and I say thank you for the interest in this new digital expression, as they say. Subscribe to Bloomberg Podcast. You get it all. You get Carol Massar. You get Tim.
Oh, yeah.
You get everything else across Bloomberg Radio, Bloomberg 1130 on Apple CarPlay, Android Auto as well. From the Interactive Broker Studios, let's start the Bloomberg Business Flash. Lisa Mateo.
You got it right now. Futures, they're falling after stocks kicked off the second half of the year with an up session. We have NASDAQ futures down 0.4%. Same for S&P futures. Dow futures, they're down about 0.3%. We have the 2-year yield at 4.75%. That's little change. The yield on the 10-year 4.45%, and that's down 1 basis point. We had some more Fed speak. Maybe that has some reason to do with it. The president of Federal Reserve Bank of Chicago thinks central bankers should start thinking about interest rate cuts. Interesting. Austin Goolsbee said the economy is on its way to a 2% inflation rate. Now, shares of Tesla, we're checking in with those. They're down about 1%. This is ahead of its sales data. Analysts expecting a second consecutive quarterly decline because the company's been struggling with an older lineup and widespread staff cuts. Meanwhile, you have Chinese EV maker BYD sales. They rose to a record after the company reduced prices across most of its models. And yes, today, June auto sales in general will get some attention. Bloomberg says sales are expected to slow as high prices, steep borrowing cuts, dealers' cyber attacks all weighed on deliveries. And just a side note, speaking of that, software firm CDK, well, it expects all dealers back live by July 4th. That is your Bloomberg Business Flash. Tom and Paul.
I saw somebody pounded a hammer against a cyber truck, some stupid video out on. Have you seen one?
Have I seen I have not seen a Cybertruck live.
Lisa?
I'm waiting for Matt Miller.
There is not, but I have seen them live on the road, and they do stand out. But did the hammer do any damage to it?
You saw one live on the road?
I did.
What's cool is I could see Marilyn Watson in a Tesla Cybertruck.
Oh, sure, absolutely.
There's no question about it. Joining us now from London, Marilyn Watson, with BlackRock, with just first-rate academics out of Cambridge and all of her work in fixed income. Marilyn, you did a tour of duty for Treasury and the Bank of England. Can't remember which. But the answer is you've got tangible government experience. We're blowing up politically in Paris, London, and Washington. For our central banks, is it business as usual, or is this an odd time for them as well?
Well, I would actually argue that it's both. So on the one hand, of course, it is business as usual, and I think both, the ECB, the Bank of England, the Fed have all made it very, very clear that they're being very data dependent at this point, and that they really are very focused on, probably starting to bring rates down in a very gradual and data dependent manner. So with the ECB, then obviously inflation today was slightly lower than it has been. It's coming down very gradually. We've had lower inflation data out of the US since the last FOMC meeting. And I think when you look at the politics as well, then looking further out, obviously inflation expectations are very important, the forecasting is very important. And I think looking into the medium term, then the impact of the different elections that we have will have an impact. But I think in the short term, and certainly in the next few months, then it's business as usual, and the central banks are doing the best that they can to set interest rates that they see will be getting to the 2% target in each of their cases.
The bond market tells the central bank where they're heading. What is the bond market saying to Jerome Powell right now?
Well, so right now, I think the bond market is really suggesting, first of all, that they do see interest rates coming down a little bit, maybe even starting, at the beginning of this year. And our view is possibly September, maybe when the Fed may start to cut rates. But I think further out, I think the bond market is suggesting that there is a huge problem in terms of the fiscal deficit in the US. And I think increasingly that will start to dominate everything else when you look at the huge amount of treasury issuance that is needed, when you look at the percentage of GDP that is spent on funding the deficit. So I think in terms of what the Fed is looking at right now, in the shorter term, we haven't seen much movement in the 2-year recently. We haven't seen much movement there. I think the market does think rates will come down a little bit, but then I think looking further out, the market is starting to get very concerned around the longer term debt funding and the potential for higher inflation again going forward.
So Marilyn, given all that as a backdrop here, how do you think our U.S. Federal Reserve proceeds from here?
So from here, we have quite a bit of data coming up between now and September. I think they really will be very, very focused on every single piece of price data, every piece of information relating to the labour market, which does appear to be softening. We obviously get the job openings data later today that we think will go below 8 million. We get the payrolls at the end of this week. And then I think over the summer, over the next few weeks, they'll be really, really focusing on whether it looks like inflation is coming down in a sustained way. If that is the case, then I think it is possible that the Fed may start to cut as early as September. And from there, very gradually continue to move depending on the data.
Are they fighting the last war? I mean, it's just simple as that. I mean, forget about ex post, ex ante, all the fancy stuff you learned at Cambridge, Maryland. Are they fighting the last war?
So obviously rates have been high for a protracted length of time, actually higher than obviously the market had anticipated at the end of last year. And I think to a certain extent, yes, you're right. I think the market hadn't expected that inflation would remain this sticky. The market hadn't expected that maybe the economy had remained this resilient. But I do think that perhaps the Fed are being very, very cautious in when they start to reduce rates because they don't want to be obviously chopping and changing. They want to be a very consistent, measured approach. But I do think that they really are in a position now where they could start to raise rates. So I think that's a good point.
So Marilyn, we have many central banks around the world, looking to cut rates, are already starting to cut rates. Where do you see opportunities in global fixed income here? What are you talking to your clients about right now?
Yeah, so I think largely in terms of global fixed income, it's still really, I think, a time for carry. Now that, rates are still at very high levels, all-in yields are at high levels, even though, some spreads have tightened quite significantly. So we're looking still primarily at relatively short duration, high carry, very attractive, very liquid bonds that we think can really help, portfolios to generate very attractive risk-adjusted carry. We also like a diverse range of positions, so we're long Spanish duration, for example, at the moment on spreads. We're short Japanese duration because we do think that the Bank of Japan will increase rates. We continue to like certain areas of the European corporate bond market, particularly when we hedge them back into dollars, then we get a very nice pickup there. And we're really focused, I would say, on the higher quality, higher carry liquid assets. That included some areas of mortgages, some areas of securitized. And I think being diversified and knowing exactly what you own at the moment, we think is key to having a very solid, attractive portfolio.
Thank you for the time. Marilyn Watson with us, head of global fundamental fixed income strategy at BlackRock. Futures deteriorate, -20 is on -24. Dow futures -142. VIX up half a point, 12.72. With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. In a televised address from the White House last night, President Joe Biden addressed the Supreme Court ruling on presidential immunity released yesterday. Biden told the nation he is disappointed in the majority decision on the prosecution of a president.
There are virtually no limits on what a president can do. This is a fundamentally new principle, and it's a dangerous precedent because the power of the office will no longer be constrained by the law, even including the Supreme Court of the United States.
Political news director for Bloomberg, Jody Schneider.
We had, of course, yesterday the decision by the court to basically it paves the way to for Donald Trump to avoid prosecution for his role, or potentially avoid prosecution for his role in the January 6th Capitol riot.
Political news director for Bloomberg, Jody Schneider. The National Hurricane Center says Beryl has now strengthened to a potentially catastrophic Category 5 storm with winds of 165 miles an hour in the Caribbean. We have not had a storm this strong this early in the year. An interesting visit. Hungarian Prime Minister Viktor Orban was in Kyiv today for talks with Ukrainian President Volodymyr Zelensky. It is his first visit to the country since the war began with Russia's full-scale invasion in February of 2022. Orban is known as Russian President Vladimir Putin's closest ally in the European Union. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul, Lori Calvasina out at RBC with a real expertise in mid-cap, small-cap, but doing it all, comes out today. And my headline here is she lifts to 5,700 on Standard & Poor's. It's up only 4%.
No.
Everybody's chasing this. I mean,
that's exactly
how do you run a strategy looking for 4% and call it a buy? It's not a buy. It's a hold.
It's just not a strong call. But I think what we're seeing,
call it, nervous raise.
But I just think we're seeing that across the street from strategists. They're chasing this market, Tom, because I don't think a lot of people have full faith and credit in this market. So they're just kind of chasing it. And a typical stock buy rating for Wall Street analysts is a 20% rise from current levels.
Or 15. I mean, let's not be pigs. But Randy's out on YouTube live chat. I mean, good morning, Randy. I'm getting it up here right now.
Okay.
Folks, Randy's out with an estimate. I mean, his firm, he came in here. He's at 7,000.
There you go. That gets your attention.
That gets your, that's a lift.
That's a lift.
Randy, thank you for that. It's a manly lift if I ever saw one. I mean, if I go out a year, that's up 27%.
Yep. I think a lot of analysts are going to be waiting for earnings to give them an excuse to do something with their price targets.
I agree. Randy, thank you for that equity call. SPX 7,000. That's the advantage of YouTube live chat as well. Futures again deteriorate, -26. Market fragile. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Today, the Labor Department reports on job openings. That comes out at 10 a.m. Wall Street time. Now, Bloomberg Economics says the May JOLTS report may show a further decline in job openings, signaling additional labor market cooling. Now, this comes ahead of Friday's jobs reports. Let's get to the markets. We have NASDAQ futures down 0.6%, Dow futures down 0.3%, S&P futures down 0.4%. We have the 2-year yield at 4.75%. That's little change. The yield on the 10-year 4.45%, and that's down 1 basis point. Few companies making news. We'll start with General Electric. They extended CEO Larry Culp's contract through at least 2027. Now, that basically removes him from the field of candidates over at Boeing. We have General Electric down about 0.2%, Boeing up 2%. Airbus, their ADR's up nearly 3%. It won a deal worth $24 billion from Cebu Pacific for 152 single-aisle jets. And Microsoft, well, the shares rose to a fresh record, but it's pushed Steve Ballmer to surpass Bill Gates and become the 6th richest person in the world. That is your company business flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. I got 8 ways to go. I mean, I tuned in. The president was speaking on the Supreme Court thing. And, instead of the debate whiteness, he was tanned. He had on as much orange as former President Trump.
Exactly.
Tanned and rested. Joining us now, always tanned and rested, from Brown University, Wendy Schiller. Her books are definitive, driving the Taubman Center at Brown forward. Wendy, I got to ask about the size of money in the donor culture within our modern politics. Did JFK or LBJ or frankly Clinton or, Bush the younger, did they bring in this kind of money that President Biden's bringing in?
Well, I mean, they didn't bring in the kind of money that we see today because they weren't legally allowed to, have that kind of money contributed. The rise of super PACs, as you know, and super PACs make it possible for wealthy people to contribute hundreds of millions of dollars. And that just didn't exist back then. But as you well know, Tom, because you know your history, there were other ways of coercing or gathering votes in those days that didn't require that much money. But in Rhode Island in the 1890s, Nelson Aldrich was a senator from Rhode Island. He was also the sort of de facto majority leader in the Senate, Republican. He handled all the business stuff and all the trade. He would have his lieutenants pay people $5 or $10, a lot of money in those days, to show up to vote.
There's $100 million out there. Somebody raised it over 3 cups of coffee, whatever. That's in a bank account, right? Whose money is that?
I mean, it really, really wealthy people contribute a ton of money. But the question is, really, in this election, I'm going into your field now. Is this really a good investment? Because voters know these two candidates really, really well. Money matters the most when one candidate is not as well known. You get a lot of bang for the buck from money and visibility. But here, what is the money buying, particularly in Donald Trump's case, because Republicans don't have the kind of infrastructure that the Democrats have to get out the vote. They have stronger enthusiasm and stronger loyalty, but they don't have the operational advantage on the ground. What are they paying for? That's my question. What do they need? What do they need the money for now?
If they don't spend this, Paul, where's the money in 5 years?
Oh, that's a great question.
A Christmas club account.
Yeah, exactly.
But they've also changed the rules, so it's a little dodgy. But state party committees, for example, can now receive money from federal party committees. They didn't used to, but Congress passed a law that lets them share that money. So it's much easier to meld the money than it used to be.
Wendy, what did you make of President Biden's commentary last night, his speech last night in reaction to the Trump immunity ruling?
It was much more coherent than his first 20 minutes of his debate performance, which was a good thing if you're President Biden's team. So the immunity decision, if you think about what the framers wrote about what they worried about the presidency, it actually hews pretty closely to that text. In other words, I think they probably did the best they could with this immunity decision. People may disagree with me, but if you look at what the founders worried about, this is what they were trying to parse out. Individual corruption versus sort of abuse of power. So, but the prospect of Donald Trump unfettered with complete immunity, and that's the way the media is sort of portraying this, I think it might shift some of those independents that fled perhaps on Thursday night back into considering, maybe we have to pick Biden, not Trump, because we are concerned about having Donald Trump in office with the perception in his mind of no holds barred, that he can do whatever he wants and he will go unpunished.
What's the status of the leadership in the Democratic Party today as it relates to President Biden and his viability?
Well, Paul, that would require identifying the leadership of the Democratic Party, and this has been the whole conundrum for the Democrats. The president of the United States is typically the leader of the party. So this is really and Biden has not really delegated in that respect.
Okay.
Chuck Schumer does his thing, Hakeem Jeffries does his thing, but really, there's not even a Nancy Pelosi. Whether you like her or you don't like her, she was a vocal leader in the party. It's unclear to me whether it's Barack Obama, it's former President Bill Clinton, who can talk to Biden about whether he steps aside. But right now, as of last night, he did not look like anybody who was walking out the door.
So what should President Biden's strategy be going forward in this campaign?
Whatever he did to prepare for his remarks yesterday, do that every day. Make sure that when you are going before the public, you sound and look vibrant, but also Trump, and the issues that the Democrats are better on, particularly labor rights. They have not talked enough about what a Republican trifecta will do to labor rights. And I think these are the key voters in the swing states, at least the upper Midwest and Nevada, for President Biden's campaign.
Professor Schiller of Providence, Rhode Island, explain to our national audience and our global audience who the former governor of Rhode Island is. Some percolate. Henrietta Trace mentioned this the other day. Gina Raimondo on the list out there. Who is she?
Gina Raimondo is a practical politician. She is business friendly. And she really solves things problem by problem. She does, I know people might get upset, remind me a little bit of President Obama. She is not wedded to a particular ideology. She takes things as they come and tries to plan ahead and really takes stands, right? So that's the way she thinks. That's great for governing. Is it great for inspiring voters? That's a question mark in a presidential campaign.
Can she appeal to the left of the Democratic Party? Can she check the boxes that President Biden has to check every day?
Her record, public unions in Rhode Island still don't like her because of union pension reform, but on things like women's freedom of choice, abortion, gun control, education, she has a very strong record as governor of Rhode Island. So, it depends what she pitches. But if you ask me to choose between Gina Raimondo and Gretchen Whitmer, that's not a contest, right? Gretchen Whitmer can win Michigan. She seems reluctant to get into the fray, but she can bring a swing state. That's something Gina Raimondo has yet to prove. So if you're going to switch gears now, I don't see where you pick Gina over Gretchen Whitmer.
Hugely valuable. Professor Schiller, thank you so much. Just really treasure this. Republicans and Democrats trying to stay in the middle. Wendy Schiller of Brown University. I mean, Paul, that's the geography is a huge part of this.
Exactly. It's what the political pundits tell us, Tom, is it's all down to those 6 or 7 swing states. That's going to decide the election. That has been deciding, the last several elections.
The governor of California. Okay, but is California a swing state? I don't think it is.
No, what I hear, it's Michigan, Pennsylvania, things like that.
Rhode Island's Rhode Island.
Yeah, exactly. Love Rhode Island.
You had governors of Pennsylvania and Michigan, and I guess that's the narrowness. Does anyone care about Lisa Mateo's vote?
I don't think so. I do.
Do I care about my vote? If we vote, does it matter? Because New York is New York. I don't know. It's fascinating. That was really something.
In New Jersey, as Lisa knows, we vote early and we vote often.
I got a problem. Randy out on YouTube is talking SPX 7000.
Yeah.
That's a 49,000 Dow.
Wow.
Are you ready for that?
Well, yeah, I'd like to get back to 40,000. That was a nice round number we had. But, I don't know. It's if this Fed's going to be cutting rates at some point, and if earnings kind of hang in there and give you what Gina Martin Adams is calling high single-digit, low double-digit kind of earnings growth, that's a pretty solid backdrop. I know valuations are stretched because some of these big tech names, but it seems
there's some angst out there. Well, we'll have to see. Good morning to all of you out on YouTube. Again, search, subscribe. Bloomberg Podcast, Apple CarPlay, and Android Auto is well. Got a wonderful list of guests coming up. Bob Dahl on the equity markets in the 9 o'clock hour from New York City. Stay with us. Bloomberg Surveillance.
And breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling. NASDAQ futures leading the losses, down about 0.6%. Dow futures down 0.3%. S&P futures down 0.4%. We have the 2-year yield at 4.76%. That's little change. The yield on the 10-year 4.45%, and that is little changed. Quick check of commodities. We have spot gold lower, $2,324 an ounce. Brent crude $87 a barrel. WTI crude $84 a barrel. Shares of Moderna, they're up nearly 0.5%. The company secured nearly $200 million from the U.S. government to speed up development of a vaccine. And this is the bird flu kind of sweeps through the nation's dairy farms. Then you have Tyson Foods. They're scaling back its antibiotic-free beef. This comes after they backed away from chicken raised without antibiotics last year. Shares are up 0.3%. And we talked about the price of eggs here on Surveillance. You remember that? Well, now the price of butter, it's jumped to a record. That's according to the latest global dairy trade auction. Why? World dairy processors, well, they've been devoting more milk to making cheese. That is your Bloomberg Business Flash. Tom and Paul.
We'll talk about that. I mean, grocery shop is no fun. This idea is people tell me food inflation's over. I'm like, you're nuts.
Yeah. No, It's just higher for longer is what they say. I mean,
my bill is still higher. So.
Yes,
my bill is still higher. Right?
I don't know.
I'm buying less with more.
Stuff.
Whatever the phrase is. Here we are complaining. Janet Riley's going to hang up. Head of fixed income team at Allspring Global Investments joins us right now out of the University of Wisconsin-Madison combine there. That's an important combine as well. Janet, is your market rational right now? Like, do you walk in the door at a ginormous firm like Allspring and say the bond market's acting rationally, or are there shadows out there that give you caution?
I do think it's acting rationally. I mean, the tricky part in this environment is the data. The data has been uneven and it's oscillated back and forth. And at the same point in time, the Fed has said they're data dependent. So that's really what has caused the volatility. I think the market is watching each data point and trying to interpret it and are being quite rational in their assessments.
You know, Tom, my call has been for a long time that pound for pound, some of the smartest money managers are in Milwaukee, Wisconsin. And I don't know why. Maybe it's all the dairy there. I don't know why.
No, it's a life choice.
It's a whole strong capital management tree out there. So, Janet, in fixed income here, what are you suggesting to folks? I mean, they can sit in a 2-year treasury and get darn near 5%. Should we be doing that? Should we be taking some duration risk? Should we be taking some credit risk? Where do we go?
It's quite an interesting time for fixed income investors. I mean, on the one hand, yields are quite high. As you mentioned, the yield on the 2-year looks quite attractive. And in fact, if you look back 15 years, we're really at the higher end of treasury yields. On the other hand, credit spreads are quite tight. And again, looking back the last 15 years on the tighter end. So that puts us in an unusual position. Do you just take no risk and crowd out at the front end? We think the best positioning is somewhere in between. We are tilting our portfolios to high quality income. So that is things like treasuries, but also structured product is an interesting place to be. We do have some additional yield from modest allocations to high yield, but we're positioned in a way that we could take advantage of some volatility and wider credit spreads if they come in a risk off.
Oh, I like the structured product discussion. That gets a little bit fancy here. Am I going mortgage-backed securities, or where am I going in that scenario there?
The great thing about structured product is there's a wide range of exposures there, a lot of different security types. So at the top of the list is agency mortgage-backed securities. These are very high quality. We like the valuations here. This is one spot within the credit universe where spreads are not at the more recent tights over the last 15 years. So we do see a bit more value in agency mortgage-backed securities and have an overweight there. But beyond agency mortgage-backed securities, there's things like ABS, asset-backed securities, wide range of exposures here. Some of the esoteric areas like data centers, whole business, oil and gas reserves provide some incremental yield as well.
I like that. That's a little bit off the beaten path there. How about emerging markets? I'm going to have an emerging market analyst come in here soon. I think he's going to recommend I buy into some of these emerging markets. I just don't know. Where do you think the risk return is there in emerging markets?
So we've been positioned more lightly in emerging markets. While we do think there is some additional yield compensation in particular segments, we do think the risks sort of warrant those higher yields. And the stronger credit stories, on the other hand, are pretty richly valued. So for us, that is not really a favorite area.
What are you seeing on flows? The bond market has been brutal. I get it. Everybody's looking forward and like, where's the next coupon or where's the next total return? But I look, Janet, at the 3-year carnage of price across all of the bond market, having nothing to do with Allspring. Where do you see flows? Does the public still want to own bills, notes, and bonds?
We are seeing demand for fixed income, and you rightly note that returns, particularly 2022, were quite disappointing. But I think as people look forward, what they're seeing is a high level of yield in the fixed income market. And unlike several years ago, that provides a cushion. So even if rates move up somewhat, we have a yield cushion. I mean, bonds every day are working for you by generating income. At these higher yield levels, I think investors are finding that attractive. And we have been seeing on the margin investors allocating to fixed income, but also moving out that heavy allocation to cash and starting to move out the duration curve.
Well, on 10-year yield, 4.45%, there's been a backup in yields. There's 14 reasons why, including the Milwaukee Brewers. But, I look, Janet, at the backup in yields. How do you know when to step in and buy a piece of fixed income?
Well, I think it's hard for anyone to exactly know. So we've been recommending to our investors to take time and start moving your duration across the curve. So diversify. We call it riding the curve. A lot of investors are very huddled at that cash because, as you rightly noted at the outset, high yields. But eventually, we think the Fed is going to be cutting rates. And so that yield you're getting on the front end is going to go away. If you start moving out the curve, you don't have to predict the exact time that happens, and you'll be in a good position for when rates do start coming down.
So, Janet, I'm looking at INGO function on the Bloomberg terminal. Shows me all the fixed income total returns kind of globally. In the U.S., the only green I see in terms of total return year to date is U.S. corporate high yield. Why is high yield doing so well, and how should we be playing this?
Well, I think part of it's in the name. It's high yield, right? It started with a higher coupon at the outset, and it is less rate sensitive. So that has been a benefit. I'd also highlight that high yield fundamentally is in a pretty good position. We have seen default rates trending down and to pretty low levels, and that really is a big driver for how high yield performs in the marketplace. That said, when we look at absolute valuations, credit spreads within high yield, it is on the richer end. So we've become a bit more cautious on high yield. We do have an allocation there, but we're waiting for an opportunity to reallocate for when spreads widen out.
Right. What's your active value add right now versus the huge index industry? What's the Allspring active value add?
Yeah, first of all, active management and fixed income, it works. It's a place where you can add value to portfolios. Our approach is to be very diversified within our strategy. Global fixed income provides a lot of different security types. So our value add is moving to where we see the value in fixed income. Again, currently, we think that's high quality income, places like structured product and European credit.
Janet, thank you so much. Janet Erling with us with Allspring here on Fixed Income and the Coupon. Paul, we've got the advantage, folks, and you've got it out in the Bloomberg terminal of looking at the Lehman Barclays, now Bloomberg index series.
Yep.
And I'm sorry, Paul, it's carnage.
Yeah, the fixed income
There's no other way
space,
to put it.
And you think about in 2022 where they had the worst year across the fixed income space ever. And managers will tell you, who've been doing this 30 years, they've never seen anything like that. 2023, they got bailed out by a strong November and December.
Yeah, they had 1 year. Yeah, they got bailed out.
And here we are this year down 2-3% across fixed income. Tough spot to make money.
I'm looking at a major one right now, and this is brutal. I mean, Sharpe ratio is just absolutely brutal. Speaking of Sharpe, the Detroit Tigers Sharpe ratio.
Oh boy,
it's like
brutal.
It's July. We'll leave it at that. Right now, futures deteriorate -25. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. President Joe Biden warns that yesterday's Supreme Court ruling granting presidents broad immunity from prosecution would make an unchecked Donald Trump more emboldened to do whatever he wants if he regains the White House.
This is a fundamentally new principle, and it's a dangerous precedent because the power of the office will no longer be constrained by the law, even including the Supreme Court of the United States.
Biden, after last week's rough debate performance, signaled he had no intention of dropping out of the race during a TV address last night. Meanwhile, Donald Trump's lawyers have sent a letter to the Manhattan judge in his hush money criminal case seeking permission to file a motion to set aside the verdict. An Israeli strike has killed at least 9 people in the southern Gaza city of Khan Yunis. The overnight strike comes shortly after Israel ordered the evacuation of parts of the city ahead of a likely ground operation. Beryl has strengthened to a Category 5 hurricane. It made landfall yesterday in the Caribbean, hitting one of Grenada's islands. Bloomberg meteorologist Rob Caron has more on Beryl.
Beryl continues to be a dangerous Category 5 hurricane in the eastern Caribbean this morning. It's now about 695 miles to the east-southeast of Kingston, Jamaica, moving towards the west-northwest at 22 miles an hour. Sustained winds of 165 miles an hour. The government of Jamaica has a hurricane warning in effect for the entire island. We expect Beryl to bring high seas and surf today to the Dominican Republic, the south side of St. Croix in Puerto Rico, and then to Jamaica tomorrow. I'm Rob Carolan, Bloomberg Radio.
Rob, thank you very much. Finally, the NBA champs, Boston Celtics, are going on the market. The team's ownership group, Boston Basketball Partners, expect to sell a majority interest this year or early next year. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Isn't this sensible? I mean, you want to sell at the top, right?
Sell high.
Absolutely. Great timing.
This is like
And the big thing is
rational.
there's a new NBA television deal being negotiated, and the numbers are going to be massive. So you sell in anticipation of that coming down the pike. So it's a great time. It's always a great time to sell a sports franchise. It seems like it just seems the values do nothing but go up.
I got to get my glass. They played 780 ball this year, 64-18. It doesn't get better than that.
Yeah. More important, the owners paid $300 million for their stake, and now they could be valued at north of $5 billion.
What's that old saying is that when do you make money when you sell a team? It's right there when you sell it.
Exactly.
Who would buy it? Do we?
Hey, the four of us could get together. If we pool our money together, we could get a stake in this.
Yeah, we could.
But you're right, Tom.
Like T-bone, or not even that. Pork chuck.
It's a shrinking list of people who can buy them, and that's why the leagues are starting to entertain private equity. The NFL's considering it. It's already in. The NBA. So, I mean, but the private equity out there.
What about foreign money? I mean, Ari's talking up, oil money.
The key to this, and I want to clarify this, the majority of the Celtics by the end of 2025, and then the rest of the team by 2028. So that's where the foreign money could come in.
Yeah.
If they be a minority interest, just because of the politics of it and all that.
Yeah.
What would Red Auerbach do? Besides light up a new cigar.
Right. And win another championship. But I mean, the Americans are all over the English Premier League in terms of soccer, as well as other European soccer leagues. So the American money's all over Europe in terms of
it's working
soccer,
out at Tottenham.
Yeah. Exactly. So
that was the interview of the year last year. John Farrow interviewing Mr. Levy of Tottenham, and I was standing there, and he goes, "Well, we really don't care about winning." I'm like, "What?"
Wow. Yep.
That's what he said.
Well, the key is you want a fan experience. That's where you
Celtics
make a lot of money.
Come on, the Celtics gave you a fan experience.
Yeah, I mean, winning, of course, is a fan experience, but there are other ways to do that.
That's great. That's what it's like with Lisa Mateo. It's a fan experience.
The whole thing, every day.
I'm really looking forward to this. Lisa coming up with some really, really good newspaper stuff. There's like a whole mid-year ferment going on right now. Futures deteriorate, -27. The VIX 12.80. Sparta says, get the show back on the tracks. Okay, we'll do that right now. We're looking at the equity market. Bob Dole again in the 9 o'clock hour. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are falling as a rally in tech mega caps. Well, that seems to be running out of steam. We'll check in with a few of them. We have Nvidia down 1%, Meta and Apple both down 0.5%. We have Tesla down about 1.5%. Checking in with Nasdaq futures down 0.6%. We have S&P futures down 0.4%. Dow futures down 0.3%. The 2-year yield 4.75%. That's little change. The yield on the 10-year 4.45%, and that is little change. To currencies, we have the dollar stronger, Japanese yen, euro, British pound weaker, the Japanese yen at 161.62 against the dollar. To the housing market, where Manhattan home sales, they rose in the second quarter for the first time in 2 years. This says impatient buyers who have been waiting for those interest rates to fall, well, they just took the plunge. And then I'm not sure if you use them anymore, but the price of first-class Forever stamps, well, they're going up again. It's in less than 2 weeks away. You're going to pay 73 cents instead of 68 cents.
73 cents for a Forever stamp?
My Christmas cards are going to get more expensive.
The only thing I can say, Hank Aaron is coming out, I believe, in July, is a Forever stamp. I'm going to buy sheets of them. Henry Aaron.
Well, you're going to pay more.
Atlanta Braves.
A lot more.
73 cents for Henry Aaron?
Yes, for each one.
Wow.
Good luck
but
with
it's
that.
forever.
But it's
exactly.
Forever until the prices go up.
That's inflation.
There you go.
Are you done?
Yes.
Okay, we're getting ready for the
good.
newspaper segment.
Yeah.
She's going into makeup right now.
Okay.
Paul, I'm looking. Torsten Slok writes my wheelhouse today. I'm sorry. IG is way underrated. There's all this sexy stuff, private credit, this, and this. And Torsten just tears to shred the scope and scale.
I mean, he just totally blew me away here today. The market value of all U.S. corporate investment-grade bonds outstanding has increased from $3 trillion in 2010 to $9 trillion today. Over the same period, the private credit market, which we all talk about as a growth business, has grown by $800 billion. Let's put stuff in
this is
context.
Pim Fox 101. Pim's got the blue book, the S&P book out. He's looking up Boise Cascade 3% bonds. And I'm sorry, there's a huge market there in IG. Now, I get it, the spreads are tight. The yield, the prices come up on investment grade as compared to full faith and credit. Right?
Yep.
I get that right?
So, I mean, the bottom line, according to Torsten Slok, is public investment grade market have grown since 2010 8 times faster than the private credit. So just keep that in perspective when we talk about the growth of private credit.
I've got a couple benchmarks. One of them, I'm not going to get it here in time, is an Apple bond denoted in Swiss francs. I can't find it right now. But, you know, I just look at these oddities because I'm not a pro in it. Torsten Slok, thank you for that.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
The daily roundup of the front pages, the Lisa Mateo Show. It's brought to you by IBKR. Financial advisors switch to Interactive Brokers. IBKR for lowest cost global trading and turnkey. Custody solutions, no ticket charges, no conflicts of your interest. Do that at ibkr.com/RIA. Lisa, what do you have?
All right, this is what we talked about before. You mentioned it, Paul. Barry Diller is back. Yes, he led Paramount Pictures. Decades ago, he lost the bidding war for the company. Now he's considering making an offer for control of its parent company. Now, this is what the New York Times is reporting. Sources telling them that Diller, who is now the chairman of digital media company IAC, he signed a non-disclosure agreement with National Amusements. But you know, Paramount, IAC, National Amusements, they have not commented on this, but this is the word that is going out. I mean, Paramount's been weighing its options for months. You know that.
I mean, Barry Diller, he's done everything there is to do in media, including creating a little television network called the Fox Network, thanks to Bart Simpson. But that was the 80s. That was the 90s. Again, in my opinion, as much as I admire Barry Diller, he is not a credible bidder. There has not been one credible bidder for Paramount this entire process. And that's shocking and sad, but it just reflects kind of where we are in this evolution of the media business.
It's a general statement. Do you or experts like Rick Greenfield, Craig Moffett, Michael Nathanson, do they assume somebody's going to buy this and break it up?
I'm not sure. I think a lot of people, the real value here of Paramount is in the studio. I mean, the Paramount film and television studio is one of just 3 or 4 of that scale in the business. So that has value. How much value, I don't know, and how much value to put on the library. The cable networks that are part of Viacom, think about, MTV, Country Music Television, TNN, all those things. The value is declining every single day as cord cutting continues. So it's real tough to value this asset.
I saw Warner Brothers Discovery having a challenge to it yesterday afternoon. Next, Lisa.
All right, we go from Paramount to Imagine Entertainment. That's Ron Howard, Brian Grazer's company. They're looking for a buyer. This is according to the Wall Street Journal. They're working with an investment bank after receiving some interest, but a deal that could allow Imagine's main financial backer, who is Rain Group, to kind of exit. But there's been a lot going on. Hollywood studios, streamers, they're pulling back on the number of projects they take on. There was this big boom in spending. So valuations for independent production companies, well, they're starting to fall over the years. But it's not the first time they explored a sale. If in 2022, Imagine talked about selling a more than 70% stake in the company to a London-based investment firm for about $600 million to $800 million. So that kind of puts a price range out there. But this possibly could happen.
Yeah, they have a huge quality library here. But they're kind of probably coming to the end of their high output years. If you talk to Ron Howard and Brian Grazer, so let's like a musician, Tom, would sell their catalog. And we're seeing a lot of that these days. This is a little bit along those lines here, and somebody will buy it.
Oh, that's a good comparison.
Yeah.
Okay. No. But they have a few things. I mean, they have a series for Netflix coming out.
Opie will do well. That's right.
Opie will do well.
There we go.
Next.
We've heard of shrinkflation. We've talked about that. But now more retailers using upflation to get Americans to buy. Okay, upflation is when you find a new use for an old product and then you charge more for it. No. Okay, so this is being used. This is a great big take article. You have to take a look at it on the terminal. Here's an example. Procter & Gamble, they're charging $14 for this all-over body deodorant, which is double the cost of a standard stick. So they're saying people are falling for it. Yes. The problem, they're getting tired of shrinkflation, right? So they started doing different things. You went to cheaper alternatives. You started to buy fewer essential items. But now Procter & Gamble actually found that revenue growth came from people buying fewer things at higher prices. So they're willing to pay more if they buy less of a few other things.
It used to be easy. The rich kids in the neighborhood, they had Irish Spring.
Right.
And the rest of us had, I can't remember what Belgium was.
We'll go with Dove soap.
They have Irish Spring, 3 houses away.
Yeah, we don't exactly.
You could smell it 3 houses away.
Next.
You could. That's a tough smell. Okay, at the same time, fast food chains, we've been talking about this. They've been lowering prices to attract customers. So now we have another entry into the value meal wars. It is Sonic. Yes, Sonic says that unlike McDonald's, Burger King, Taco Bell, who are doing these temporary value meals, Sonic is saying their meal value is here to stay for good, okay? They're calling it a Fun 99 menu, so you have burgers, snacks, desserts, new Crunch Wraps. They are $1.99
This is for Tom, Lisa.
Okay.
The $1.99 menu will also introduce 2 new items, a Bacon Ranch Queso Wrap and a Southwest Crunch Queso Wrap.
Yeah, I see that
Tom.
here.
He's going to pull up in the Bentley, out in the Hamptons, and
like they have tots. For $1.99. How many tots do you get?
It doesn't say which size it is. You can get a shake too. They have those 12 different flavors of shakes.
Yeah, how big is it? For $1.99.
I think the shake is either the 12 or the 16 ounce.
I've not been to a Sonic.
I went when they first started opening, but I haven't been. I mean, it's nice. They come out to your car.
You drive up, right?
No, you pull in, and the people come out to your car. They used to do it on roller skates. I don't know if they still do anymore. Do they still do the roller skates?
Yeah, I had a job there. Can you see me on roller skates?
It's been a while.
Can you see me on roller skates?
The servers come on the roller skates.
Anything else?
No, but that's it.
You mentioned butter.
Yes.
I mean, butter's up.
It's up. They're saying because they're focused more on cheese, and that's taking away.
They have to decide what to
butter.
do with their milk.
We need more cows, is what we need.
Yeah, and the problem is that it's coming at the same time that holiday season, baking season, starting to I don't want to talk holiday in the summer, but it's coming up. It's coming up.
Lisa Mateo, thank you so much. The newspapers today. How about I got a huge response to this 3 weeks ago. The Wilson sisters.
Wow.
In Hart. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Lisa Mateo, Michael Barr, Bloomberg Surveillance on YouTube. Search, subscribe, Bloomberg Podcast. That's where we are, Bloomberg Podcast out on YouTube. It's growing each and every day, each and every month on Apple CarPlay, 20 nations worldwide. There's a new software version of Apple CarPlay coming out.
Oh, is that right?
It makes your toast in the car.
All right, I'm sure the Apple people have been in touch with you.
They're doing something new. Android Auto as well. We say good morning, and a really special treat here in the 9 o'clock hour. Julian Emanuel will be with us for an entire half hour in the equity markets, and in moments, James Caron of Morgan Stanley will join us. We're sort of cross-asset, not so much bonds. We've done some coupon.
We've done some.
I'm sick with yield. We'll just talk to them about the landscape that's out there into the second half of 2024. Paul, futures negative 24. Why?
It's just taking a little bit of a break here, Tom. I mean, we've had this move here in the first half of the year. Maybe people just trying to get a little sense of what's happening.
Pre-earnings
What's
ends?
next? Yeah, what's next? We got jobs on Friday. How about that?
Yeah, the jobs report will be there. I believe.
Jolts
Am
today.
I off on Thursday? My people haven't told me.
I think you get the national holiday off.
What do you think, Lisa? We're off.
You're allowed.
Farrell's working. That's what I know.
Got the barbecue.
But we're gonna be off, and then Friday we're coming in for the jobs report.
Yep.
And I'm sorry, it's important.
It's
been underplayed with all the politics going on, and
yep. A little bit of a slowdown. 200,000 jobs looking to be added.
It'll be interesting to see. And there's a huge variance there. That's statistics suck.
Yep.
I'm just saying variance to impress Jim Caron as well. Let's get right to it. The Interactive Broker Studios. The Bloomberg Business Flash, El Mateo.
You got it. Futures, we're slumping. This is ahead of jobs data that could give a few more clues on the outlook for U.S. interest rates. Speaking of rates, we had more Fed speak. Chicago Fed Chief Austin Goolsbee said that the Fed should automatically cut interest rates if U.S. inflation continues to fall back to target. He told Bloomberg TV, quote, we're on a path to 2%. We have Jerome Powell speaking later. Futures, we'll get to it right now. We have NASDAQ futures down 0.5%, S&P futures down 0.4%, Dow futures down 0.3%. The yield on the 2-year 4.74%, down 1 basis point. The 10-year yield 4.44%, down 1 basis point. Shares of Tesla, they're down about 1.5%. This is ahead of its sales data. Analysts expecting a second consecutive quarterly decline. Meanwhile, Tesla suffered a 24.2% year-on-year fall in shipments from its factory in Shanghai. That's according to Bloomberg calculations that were based on data from China's Passenger Car Association. Speaking of China, Chinese EV maker BYD, their sales rose to a record. The company reduced prices across most models. And today, June auto sales in general is going to get some attention. Bloomberg analysts say sales expected to slow as high prices, steep borrowing costs kind of weigh on those deliveries. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Moments ago, thank you to Majaba Rahman of Eurasia Group, who's been just outstanding out on social about the French elections. Paul, the Le Pen group, the Rassemblement National, they just publish their platform moments ago. It's a huge deal in France. Can I read it to you?
Sure, please. Oh boy, here we
go.
Le
peuple va exprimer les 30 juin et 7 juillet. Should I stop?
Yeah, please.
Okay, we'll wait for a translation. Maybe Lionel Laurent will give us to us. We need no translation on the debate and the fractious constructive debate at Morgan Stanley that, among others, Stephen Roach invented. It is a different house. Joining us now for this half hour, Jim Caron, CIO Cross Asset Solutions, Senior Officer Argument at Morgan Stanley. What is the distinction? What is the number one point of debate at your shop?
I think what it is, and by the way, good morning and thank you for having me. I think what it really is the question of when will the unemployment rate start to rise fast enough to give the Fed confidence in order to cut interest rates, right? Because where the debate is today is that there are various forms of inflation that are out there, right? You've got the super core, which is running too hot. You've got core CPI, which has made a lot of progress. You've got core PCE, which is kind of like in the sweet spot, and the Fed would go on that. But the question, though, is with those three data points somewhat conflicting, where does the Fed have confidence to actually go? Now, we think that maybe the Fed will cut interest rates. It'll start in September. But what's required for that to happen is for the unemployment rate to actually start to show some progress higher. And why that's important is because the declining trend in inflation, and it is declining, will be viewed by the Fed as sustainable and anchored decline in inflation if the unemployment rate rises, which would then put pressure downwards on wages. Wage inflation slowing should create a more stable inflation environment. So it's really a question about jobs creation, and it's a question about the path and pace at which inflation falls.
That's interesting because, again, I think most folks we talk to just say the Fed's focused on inflation, but really it's labor component of inflation, which is key here. Is there a kind of a range, a number of inflation that you think the Fed will kick them into saying, okay, we've got some movement here? Is it 4.2%? Is it 4.5%?
Yeah, so that's the output, right? So that's like I would almost think of that as the residual, right? I wouldn't really think of that as the absolute. I mean, yes, I mean ultimately it will come down to that number, and it's the easiest way to understand it. But the Fed invented something called the super core for inflation, and this is core housing X services. This is really a measure of inflation that's focused on more of the labor-intensive segments of the economy. So your barber, a janitor, somebody who's labor-intensive in terms. So basically, it's really a way of measuring inflation that is being contributed by wages. So, that number right now is still running pretty hot at 4.8%, but it is likely to decline. So I would say that to me is I would think of that as really the measure that the Fed's going to watch. If that starts to come down, the natural output of that or the residual of that will be that the unemployment rate should start to move up towards 4.2, 4.3. So, I mean, if I simplified it, yeah, I'd say that, around 4.3, 4.2, I think the Fed would feel comfortable.
In your cross-asset universe, does 60-40 work, or is there a 60-40 amendment to not so much enhance return, goose return, but to avoid challenges? What's the Caron 60-40?
Yeah, no, that's a great question, and it's going to be debated for a long time. But so it's not that the 60-40 doesn't work. It's just I think that the 60-40 will be suboptimal. And the reason why the 60-40 portfolio will be suboptimal is we have to take a little bit of a trip through history. If you go back to 1981 to 2021, if you look at that 40-year period of time, bonds did very well during that period. 37 out of 40 years they made money. So very stable, very good returns. Your Sharpe ratio or your risk-adjusted return, if you had a 60-40 portfolio, was roughly 7%, which is great. Passive investing 60-40 did really well for that 40-year period of time. If you look from 2022, 23, and into 24, what you're seeing is that bonds are becoming less stable, less reliably, producing good, solid returns, and that's likely to occur into the future. So what it would suggest is that now the 60-40 might not give you 7%, but it might actually only give you 5%. And that's a meaningful difference in types of returns. So I would say that the new way of thinking about how do we use bonds to hedge our portfolio needs to be a lot more flexible. So it could be 70-30, it could be 30-70 in some instances. Really what we're trying to account for is the volatility of returns in bonds, which we think will start to follow the business cycle more than just being a 40-year downward trend in rates and strong performance for that period of time. So we have to account for the variability in bonds going forward to make the adjustments in terms of the allocation 60-40. So it's not as simple as a passive.
Right.
I would say that. And you might even want to add alternative investments into the equation too.
You're killing me.
Well, I mean, I'm telling you, because what it does is it creates a diversification element that is attracting returns from a different segment of the economy.
So the Caron summary is buy more NVIDIA.
I wish.
We're going to come back. Jim Caron with us. That was a clinic there, folks, on the dynamics, and I mean that seriously, the dynamics of a 60-40 choice set. How about that for some fancy math talk and all that? Speaking of fancy news talk, with our news in New York City, Michael Bell.
Thank you very much, Tom, Paul, Lisa. President Joe Biden warns that yesterday's Supreme Court ruling granting presidents broad immunity from prosecution would make Donald Trump in the White House unchecked.
Today's decision almost certainly means that there are virtually no limits on what a president can do.
Biden, after last week's rough debate performance, urged Americans during a televised address last night to think carefully about their election decision and signaled he had no intention of dropping out of the race. Meanwhile, President Biden's campaign just reported its best fundraising month yet in the 2024 race. We get the details from Bloomberg's Jody Schneider in Washington.
The campaign says he raised $127 million in June. This is a bit of a lifeline to him as he faces pressure, as we've said, from some quarters to step aside. And it included $38 million raised in the 4 days starting Thursday, the day of that presidential debate. So go figure. While there's calls to step aside, he raised a lot of money, including in a fundraiser in the New York area over the weekend.
Bloomberg's Jody Schneider in the nation's capital. Parts of the Caribbean are getting flattened by Hurricane Beryl, which is now a powerful Category 5 with winds of 165 miles per hour. It caused serious damage in the eastern Caribbean yesterday, and it's on the move. Hopefully the track, along with its wind field, will stay south of Puerto Rico and Cuba. A Massachusetts judge declared a mistrial in the case of Caron Reed, the woman accused of running over her boyfriend, a Boston police officer, with her SUV and leaving him to die in a snowstorm in 2022. Jurors were in their fifth day of deliberations when the foreperson eventually told the judge that they hadn't reached a unanimous verdict. Defense attorney Alan Jackson celebrated the decision outside the courthouse.
This is what it looks like when you bring false charges against an innocent person.
Reed must return to a Massachusetts courtroom later this month and stand trial for the death of Brian O'Keefe again. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom Paul Lisa.
Paul, that's a clinic from Jim Caron on 60/40. We'll come back to that here in our next section with him. But yeah, I have real trouble with marketing gimmicks of retirement. It's just like somebody's come out, okay, here's what we're going to sell, and away from just basic investment.
Yep.
I mean, that's what's the number one regressive for me is you got to put aside more. Yep. That's from back to
starting earlier too.
In
Starting
earlier, and you got to put aside more.
Max the 401k.
And that solves a lot of the problems. But folks, we'll do that out on digital.
Power of compounding. That's real.
It's there. Yeah.
Man.
It's.
All the Sweeneys are contributing max to the 401k.
Yeah,
that's
keep
the only
that
thing.
afloat.
Yep.
Okay, well, that's good to see. We're going to come back with Jim Caron in the next hour. Julian Emanuel will join us. We'll do it on the equity markets as well. Again, Lori Calvasina raising her S&P call to 5,700. And, as you said, Paul, everybody's just trying to keep up with the market. That's
keep up with the market.
Translation here.
Yeah, I mean, we track that at Bloomberg News. We have a good reporting on kind of where the strategists are with their price targets, and it's been up and to the right for the last couple of years.
On the data check, let's do some of the obscurities out there. Brent crude 87.20. This is not a small matter. And somebody said to me the gallon of gas is starting to lift.
Yep.
Just now is starting to lift as well, but we're getting near $90 a barrel.
Check it with
on the global price of Brent crude, 87, West Texas Intermediate, $84 a barrel. Gold hasn't been a point of conversation. I want to note Mike McGlone with a great note today on corn. Corn printed under $4 a bushel, which I'm told is a big deal. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Today's the day the Labor Department reports on job openings, which has been creeping up for lower for about 2 years. That comes out at 10 a.m. Wall Street time. This comes ahead, though, of Friday's jobs report. Right now, we have NASDAQ futures down 0.5%, S&P futures down 0.4%, Dow futures down about 0.3%. We have the 2-year yield at 4.74%. That's down 1 basis point. The yield on the 10-year, 4.43%. That's down 2 basis points. We have spot gold lower, $2,320 an ounce. Brent crude, $87 a barrel. WTI crude, $84 a barrel. Companies making news. That's Europe's largest lender, HSBC. Shares down 0.5% in London. Sources say it's slowing down hiring, also asking investment bankers to cut back on their travel and also their entertainment expenses. Then you have General Electric. They extended CEO Larry Culp's contract through at least 2027. And what that basically means, it removes him from that field of candidates over at Boeing. You have General Electric down nearly 1%, Boeing down about 0.5%. And Airbus shares, they're down about 1% in Paris. It won a deal worth $24 billion from Cebu Pacific for 152 single-aisle jets. That is your Bloomberg Business Flash. Tom
HSBC.
and Paul.
When I was a lowly banker at Merrill Lynch, they tried to take away our black cards, which is a lifeline at midnight. We revolted. We did a work stoppage.
Really?
And no pitch books made for 24 hours. They went back on that right quick.
They did.
So
well, we'll see what happens.
It's interesting, man. I got a memo from Sparta, and he said, the lunches are just too much. I mean, I'm over at Michael's.
You're at Michael's, so you got the table.
Michael's, Steve's helping me out, and the kale salad. It's like 3 digits now for the kale salad, and he says, if you don't straighten out and go to McDonald's for a $5 lunch, you're going to Sonic.
That's for $1.99.
That's what Sparta said. We have a joy for you in this hour. Jim Caron of Morgan Stanley.
Jim Caron, Cross Asset Solutions, CIO, Morgan Stanley Investment Management. Hey, Jim, Lisa and Tom, they've both been in the Magnificent Seven stocks. They're just laughing all the way to the bank. I, unfortunately, have not. What do you tell equity investors to do is it okay just to be long these Magnificent Seven, or do we actually have to do some homework?
Well, look, I mean, the way I think about this is follow the money. The Magnificent Seven or the Magnificent 10 or whatever it is, they're doing well because their earnings and their earnings revisions have been exceptionally strong. If you look at the S&P 490, so if you X out those 7 or 10 stocks, if you look at the earnings revisions in that category, it's been pretty close to flat. It's been relatively dismal. So it's not that the broadening or the broader sectors of the market are these great opportunities that are just minting cash and earnings are going up. I think the market's rightfully so looking at it. So if you look at the equity market, the S&P 500, X the Magnificent Seven, it's up about 7% year to date, which is pretty good. I mean, that's not bad. If you look at the S&P 500 total with the Magnificent Seven in it, then it's up, closer to 15% year to date. So, it's really a question of following the money. So I would have to say that the way that I would look at this is that you still want to look at the cap-weighted S&P 500. You still want to incorporate that overweight to those bigger stocks, because that's really what's capturing the earnings. That's what's driving the markets mostly right now. I think it's too early to say that we're going to have this cyclical recovery, that everything's going to start to move higher, and therefore you can broaden out to the other 490 with a lot of confidence. That's really not been the case for the last year plus, and I don't think that that's changing anytime soon, because a big, broad cyclical acceleration and recovery is not our base case.
How about valuation here? Have earnings kept up with this move we've seen off that, I guess, October 23 kind of level here?
Yeah, I mean, look, you mentioned NVIDIA earlier, in jest, but NVIDIA is a 30 PE stock. It's not like, is that high? Sure, it's high, but it's not it's not something that is astronomically high. A lot of the companies that are doing well are actually making money. So people make parallels back to the year 2000, 1999, the dot-com bubble. Back then, these companies weren't making money. Today, these big companies that are doing well are actually actually making a lot of money. Their earnings are there to justify it. So it's a big difference.
I want to talk here about free cash flow. I've been reading Michael Mauboussin. I've been going back to the Credit Suisse. He's now at Morgan Stanley. I mean, do you guys talk? Caron and Mauboussin talking. Talk about nerd patrol.
I invest with him. I mean, So absolutely. I mean, he's one of the smartest people in the room. I mean, there's no question. So, look, I think some of the factors that we look at to think about how we become, let's say, defensive or smart about approaching this market, there's a couple factors. Like, size is going to matter, right? So the large cap companies are doing better than small. They just have better balance sheets. Good, strong balance sheets, free cash flow yield. So Mauboussin, would be all over that.
Right.
Earnings per share growth and interest rate coverage.
Okay.
So
I want to go Delta T on you. We're going to go aerospace engineer now.
Right.
And as you know, Jim, you can literally go log. You can throw a log on the x-axis here. I'm going to suggest that this era is where the terminal value is less important and some form of weighting of quarter by quarter or year by year free cash flow excellence is getting us to these valuations. We've moved away from a classic 7-year DCF. Do you agree?
Yeah. So the way that I would phrase, I totally hear you. So the way that I would phrase that is that when you look at companies that don't have a lot of earnings, but you project a terminal value into the future and say, well, I can look past no earnings for a period of time because the terminal value is high, then that's, that error, I think, that's not where we are
But what
today.
about the Magnificent Seven? I mean, Microsoft, let's just pick it as, is Ballmer did pretty well. Did you see that? Ballmer's doing better than
he hasn't sold a share.
Microsoft, to me, is not a 7-year, where are they going to be? It's a quarter-to-quarter slog of excellence.
Right. Well, it's turned into that. So I'd say that the terminal value for a lot of these, the Magnificent Seven, people debate as to how high it could actually possibly be, but it's a positive number, and it's a tangible positive number because they're making their earnings. The issue, though, is because their valuations, and I think this gets to your point, Tom, because their valuations are relatively high and there's high expectations, that they had better make their quarterly numbers. And if they don't, they're subject to a correction. And that's what makes the market relatively scary right now, is because you have such a narrow group of stocks that are really keeping up the index. If they miss a quarter, and if prices adjust in one of those stocks, it could have a meaningful impact on the overall index, and this could add to volatility in the markets.
By the way, probably the best notes we get from any guest is this guy. I mean,
he studied Sears and Zemansky. If you got through Sears and Zemansky physics, you survived.
One thing jumps out at me, though, and I got to ask, French equities.
Yeah.
This will be the only time this week I think we talk about French equities.
Yeah.
What's going on there with the political unrest?
So, look, I mean, this is an outlier view in our portfolios. And when this political unrest took place, we saw this as a buying opportunity, primarily in the equity space. And the reason is I think that there was an overreaction in the markets to what happened in the French election. So, yes, the National Rally Party, Marine Le Pen's party, may take over the lower house of Congress and might have a majority state. And I respect that it creates some, disruption in the political norms within France. But the reaction we had in the market, if you look at the spreads between French bonds and bunds, that spread widening over a 1-week period rivaled the 2011-2012 period when the European Union was in question, in the first place. The equities fell to levels in terms of a standard deviation move you'd have to go back to 2017 to see some of these moves. So the extreme amount of move that took place over this, I just thought was just overdone. And if you look at French equities, year to date, they're about flat on the year. They were negative on the year. And if you look at the rest of the equity markets across Europe, they're up about 7-8%, US. This is so far being contained just to France. And I think that, and also to a narrow set of French companies. The broader French market, I still think is in good shape. And we saw this as an opportunity to buy good quality assets on the cheap.
All right. Jim Kerr, this has been a joy. Thank you. With Morgan Stanley here, and we'll do this again in the 9 o'clock hour with Julian Emanuel. An extended conversation with Mr. Caron on where we are. The 60-40 discussion, folks, I thought was just brilliant. The dynamics here of what to do with this odd bond market. Caron lifting the markets. Futures are negative 24. They're now negative 21. The VIX 12.63. We begin a huge economic data dump into a holiday-lengthened work week. From New York City on YouTube, on Apple CarPlay, on Android Play, on Android Auto, I should say. Bloomberg Surveillance.
And breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still falling after stocks kick off the second half of the year with an up session. Right now we have NASDAQ futures down 0.4%. Same for S&P futures, Dow futures down 0.3%. We have the 2-year yield 4.74%. That's down 1 basis point. The yield on the 10-year 4.44%. That's down 2 basis points. And we have European stocks. They decline. Policymakers signal that they need more evidence that price pressures are under control. Taking a look at the stock 600 right now, down about 0.7%. And then the CAC in Paris erased most of yesterday's gain. The country prepares for a second election round. That is down about 0.7%. Moving over to shares of HelloFresh. They are higher, up 6% in Germany. Now, that's because JP Morgan data shows stabilization in the North America meal kit business. And then finally, shares of Microsoft lower, down 0.5%. Bloomberg reporting its AI deal with G42, that's United Arab Emirates artificial intelligence firm, could be at risk because of national security fears. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. If you're ever so lucky in England, you get to do economics at Edinburgh. It is different. Yep. The air is different. There's a graveyard. It's sort of run down, but nevertheless magisterial, up on a hill of David Hume's tomb. Memorial, I guess is what you call it. And the heritage is great. It just brings a completely different twist to economics versus the heathens down south at Oxford and Cambridge and
back in the late 80s, I worked at Payne Webber in Finsbury Square for about a year. Yeah. Now they've moved just like a block over, because it's now Payne Webber's now UBS, at 5 Bishopgate. Brand new building, spectacular
fancy
building. Yeah,
and they're near
the city of London.
The Liverpool train
Smart
station
people
as well.
Exactly.
Abigail Watt joins us, economist at UBS, and out of the UK, but also looking at the American economy as well. Abigail, I got to start with the July 4th festivities. I don't want you to be the political analyst for UBS. I know that's not appropriate, but the UBS take on Brexit, is this election essentially a mandate on Brexit?
I cover the U.S. economy.
But what's your group say? I mean, what is the UBS publishing of this election and the effect, the change in Brexit?
Yeah, so my UK colleagues, my colleagues that cover the UK economy, have been writing about the election and kind of what's at stake, writing about, I guess, perhaps some of the shifts that we might see in policy, given some of the kind of expectations around the shift in kind of who's governing.
Right.
But yeah, as I say, my main focus actually is on what's happening in the US and in the elections there later this year. I think that's actually kind of a big element of the outlook for us on the US side.
Right. Are you modeling in a sub 2% real GDP suddenly with Atlanta GDP? Neil Dudd out with a smart note today. Hello, we're under 2%. Abigail Watt, is the United States modeling out sub 2% real GDP growth?
So we've been noting for some time that we think there's an underappreciated slowing happening in the U.S. economy. We saw Q1 GDP revised up a touch last week to 1.4%. But under the hood, we saw consumption revising down from 2% to 1.5%. The consumer is the driver of the U.S. economy. So that's kind of less encouraging sign. We have currently we're tracking 2% for Q2. But overall, we have sub 2% growth for this year. We're actually tracking below 1.5% for growth in the US this year. And we do think that it is something that, has been somewhat underappreciated, this kind of slowing that we're expecting and that we are starting to see in the US economy.
Abigail, we had a prior guest on who kind of was making some points that the Fed is really focused on the labor market, and to the extent that we need the labor market to soften before the Fed will cut rates. How do you think about the U.S. labor market? We're going to get that labor number on Friday, of course.
Yeah, so alongside obviously our expectations that we think growth will continue to slow through this year, we do see the labour market also slowing. We are below consensus for payrolls on Friday, so we're expecting a 165K gain in headline payrolls.
Whoa!
So we're on the lower end.
Okay, so what's the market going to do if we get a UBS 165? I'm sorry, I may have to come in on Friday.
Yeah.
I do think there will be perhaps some more acknowledgement that we are seeing that slowing in the US economy. And as you said earlier, I think this is a really important point and a really important thing for the kind of signaling that we've had from the FOMC. We were a little surprised in the kind of statement after the June policy meeting that they didn't acknowledge some of the slowing on the activity side in the economy in the statement. And I think Chair Powell obviously referenced the kind of strength of the labor market multiple times through his press conference. So I think it's going to be really interesting. Obviously, we'll hear Chair Powell speaking very shortly. So I think it will be interesting to see kind of whether there's any acknowledgement of some of that slowing, and whether there's any kind of shift in tone there in terms of the kind of labor market outlook. Because I do think that is the other element. It's not just kind of what's happening on the inflation side, because a number of FOMC members have started to talk about the balance of risks and the fact that the dual mandate is, becoming more balanced in their thinking.
So, Abigail, if that's in fact the case, do you guys make the argument that the Fed should be cutting rates now?
So we've noted for some time that, if you looked at, for example, the policy rules that the FOMC themselves publish, that would imply that rate cuts would be in order. Our expectation, though, is that we actually pushed back our expectations that they won't deliver a first cut until December. And that is on the basis of how we think they're viewing the kind of outlook, how we think they're viewing the data flow. We have heard since the June meeting, perhaps a little bit more acknowledgement of the slowdown across various members of the committee. But last week, we heard from Governor Cook and Governor Bowman, and they gave quite contrasting views on the outlook. So Governor Bowman, more clearly focused on some of the inflation risks and the upside inflation risks that she sees in the outlook. And, I do think that's kind of playing into this kind of, outlook for the FOMC this year.
If you're sub 2%, what's your domestic final sales? If you take out international babble and inventories, what's the UBS domestic final sales call?
So we're obviously also expecting weaker final domestic sales. I think if we look at that, I think it's interesting actually. If you look at kind of Chair Powell in the press conference was asked about the resiliency of the economy, and he did point to final domestic sales as coming in, relatively strong in Q1 and taking out some of those volatile components. But overall, we have consumption growth slowing through 2024. We have business investment being held back by perhaps some of the kind of policy uncertainty around the election in particular. And we do think that one of the other key elements of this story is the fact that we see the kind of fiscal impetus to growth kind of fading through this year. So we do think it is slowing in the domestic economy. We don't think that this is kind of a story of external factors weighing on U.S. growth.
So, Abigail, you put all that together. That sounds kind of like a soft landing to me. Is that how you guys are framing it?
Yeah, so I mean, we don't have a recession in our base case. I think it's how you define a soft landing seems to differ amongst market participants. Our view is that we think that you'll see the economy slow below trend. We do think that slowing will take the economy below trend. We think that off the back of that, you will see inflation kind of coming back towards the Fed's target by the end of 2025. So we have inflation heading to 2.1% by the end of 2025. And in our view, I think that means that we could see a faster pace of cuts from the FOMC through next year. So we actually have a kind of stronger cutting cycle than is currently priced into markets for the Fed next year on the back of both of those two things.
Abigail, thank you. Abigail Watt with UBS in London, looking at the American economy and some comments there on Brexit. Paul, the Brexit thing is a huge deal.
Yeah.
I mean, I've seen some charts where basically it's reversed. I don't know if they want to get back in the euro, but
good luck with
it'll
that.
be fascinating
Boy, if I were Europe,
to see what they do.
Yeah.
If you're France or Germany, you're like, what?
Yeah. It's just, we saw this coming, from miles away even before it even happened. But here we are.
I love my glass. I just had a Julian Emanuel sighting.
Oh, wow. In the house.
It's
That's
good.
big.
I mean, he'll be here in the 9 o'clock hour. He's got a tang.
Yep. Good for him. He's ready to go.
Futures at negative 22. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Joe Biden warns that a Supreme Court ruling granting presidents broad immunity from prosecution would make an unchecked Republican Donald Trump more emboldened to do whatever he wants if he regains the White House in November's election. Biden spoke from the White House in a televised address last night.
It's a terrible disservice to the people of this nation. So now the American people have to do what the courts should have been willing to do, but will not. The American people have to render a judgment about Donald Trump's behavior.
Biden has been under intense pressure after his disastrous debate performance against Trump last week. Hurricane Beryl has strengthened after becoming the earliest ever Category 5 storm in the Atlantic, with the system heading toward Jamaica with life-threatening winds and heavy rainfall. Bloomberg meteorologist Rob Caron has more on the powerful storm.
Latest information on Beryl still has the storm as a Category 5 hurricane with winds of 165 miles an hour. It's moving west-northwest in the east central Caribbean at 22 miles an hour. It's less than 700 miles to the east-southeast of Kingston. The island of Jamaica is under a hurricane warning. The Cayman Islands are under a hurricane watch. We think by tomorrow afternoon the system is going to be just southeast of the Kingston area, producing hurricane conditions across the entire island of Jamaica. It remains a dangerous storm. I'm Rob Carolan, Bloomberg Radio.
Finally, a flight from Madrid to South America turned into a terrifying ride. Rough turbulence led to nearly 36 injured passengers, including one person who was stuck in the ceiling of the aircraft. His legs were dangling over the aisle. He is expected to recover. The Air Europa flight from Spain to Uruguay with 325 passengers on board hit turbulence over the Atlantic Ocean, making an emergency landing in Brazil. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Wear your seatbelt. What else has to be said? I mean, this is one of the most, it's tragic, but it's solvable.
Yeah, if you just wear your seatbelt. I mean, this poor guy, there's video of him. I mean, he's up in the ceiling. He's up in that, that part where it happens.
Once, not that bad, frankly, a woman on the ceiling.
Yeah, it can happen rather easily for that.
CFA out. This is good. Catherine Doherty, thank you so much. Paul, this is a real sign of the end of the pandemic, and the CFA numbers doing better, way above like 60% flunk. Wow. It's sort of like baseball. You go back to the dugout. 60% flunk, 55% flunk. And this time around, only 33% flunk, 67%. But here's the big thing, Paul. If you're a first-time tester, you had a 67% pass rate. And those that deferred or they waited or they had an excuse had a 39% pass rate. I'm a member of the CFA, and all I can say to Charlottesville is they have massively improved the study guides, the study material, Paul. It used to be a train wreck of multiple books. A legend at Fidelity, George Vanderheiden, used to laugh at me studying for this. But the bottom line is they've made it not easier, but they've made it more doable for those with serious intent.
Yeah, the technology's improved dramatically. The pandemic really forced them to up their game, and the good folks at Bloomberg and Bloomberg Intelligence supports all of our analysts, having the opportunity to sit for the CFA. And many of the Bloomberg Intelligence analysts have taken advantage of that. And you see them every year. They work a full day, and then they go into a team room and they study for 2 or 3 hours.
Yes, or more, particularly as you get to the exam. And I sat on the couch up in the food court as I do it, 10:15 every day. And someone came up and said CFA or MBA.
Right.
And my answer is both. I mean, I don't know what else to say. They're very, very different. But CFA level 2, there's 1, 2, 3. Pass rate spikes to 59%, the highest since 1998. Boy, is that a sign. That means everybody's got to work from the office now.
Exactly.
That's what it means. Work from home is done. Catherine Doherty, thank you. For that. Congratulations to all of level 1, 2, and 3 CFA. Futures at -25, the VIX 12.68. Looking out at the yield space, as Paul calls it, 2.12%, and the 10-year real yield getting up there, not peak, but lifted. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still falling, and this is as that rally in tech megacap seems to be running out of a bit of a steam. We have Nvidia down about 1%, Meta down about 0.5%, Apple down nearly 0.5%, Tesla down about 1.5%. Nasdaq futures down 0.5%. We have S&P futures down 0.4%, and Dow futures down 0.3%. To the 2-year yield at 4.73%, that's down 2 basis points. The yield on the 10-year 4.43%, and that's down 3 basis points. Shares of Moderna, well, they're up about 0.1%. The company secured nearly $200 million from the U.S. government to speed up development on a vaccine, and this as the bird flu threat starts to strengthen nationwide. And Tyson Foods scaling back on its antibiotic-free beef. That comes after backing away from chicken raised without antibiotics last year. Their shares up 0.3%. And finally, want to check in with shares of Paramount. They're up 3%. We talked about this. The New York Times reported Barry Diller considering making a bid. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. I think Lindsay Piegza, it's Stifel. There's a few people out there saying enough. We don't really have disinflation, and there's a real argument going on. I mean, it's not a small matter. Paul, it begins this morning, 10 o'clock, JOLTS job openings.
Yeah.
Again, not a small matter. And through the day, auto vehicles, which used to be 16 million, 17 million, now they're a little south of that. But then there's just a wall of data here.
Yeah, absolutely. We got the whole week. Go. We're going to have to come in here on Friday. Tom.
On Friday, because there's a lot of data to really let us know where we are, which looks to be sub 2% real GDP. Blarina Arucci is with T. Rowe Price. I've done wonderful panels with her before. Blarina, good morning. And you just say this is a Fed that's going to have to wait. What does the disinflation crew get wrong?
Good morning, Tom. It's great to be here today with you. So I think we need to be very careful because we have been here before. We have had progress on inflation that suddenly stalls. We have to recognize that the economy is strong. The labor market is not cracking. Employment growth has slowed, but layoffs are pretty low, and the unemployment rate, even though it's ticked up a little bit, remains at historical lows. So what concerns me about this disinflationary narrative is that we've had goods prices decline, and now we're looking at imported inflation, agricultural prices, shipping costs, and so on. All of those price pressures are picking up. China PPI is also not disinflating anymore. And so in a world where the disinflationary impulse from core goods is coming down, then you really need shelter and services to come down a lot, to slow. And that's not what we're seeing so far.
So given that background here, what do you expect this Federal Reserve to do? Because there are a lot of folks out there that are saying they need to be cutting now. What do you say?
Well, I think looking at the totality of the data and also being very pragmatic about monetary policy. We know that the usual stars that guide policy, R-star, the equilibrium unemployment rate, and so on, they're not holding in this post-pandemic world. We have lots of dynamic shifts in the economy. And so I think being data dependent and being patient. And for this, I think I'm concerned about these pressures from the market to cut interest rates as soon as September. I think a Fed that is more of a risk manager, managing political risk ahead of the elections, managing risks around imported disinflation and goods inflation, I think that's what we need to be paying attention to.
I mean, Blarina, we just had someone on looking for disinflation, sub 2% GDP, and the answer is they look at the jobs report, and it finally cracks here on Friday. Now, you're doing, long only buy side T. Rowe Price. I mean, it's a different beast. I mean, she has to deal with rude people like Sebastian Page. I don't know how she does it. But Blarina, from your view on bonds, fixed income at T. Rowe Price, does this jobs report on Friday begin to say something to the people like you?
So I think this jobs report will be important for people who are really getting ready to go long duration. If we see broadly based employment growth and wage pressures remaining around where they are, I think the market will wake up and start to price September at a lower probability and open up to the idea that maybe we can get a cut by the end of the year or early next year. And in that case, it's really quite soon to be long duration, but at the same time, with a strong economy and a strong labor market, I can see this being positive for risk. And again, the Fed is keeping a dovish bias, which I think keeps a lid on financial conditions and hasn't allowed financial conditions to tighten a lot this year, even as the market has priced out cuts. I think from 6 or 7 cuts earlier this year to barely 2 cuts by this summer.
Yeah, the survey, Paul, 200,000 has just dipped here as we stagger forward to 198,000. So I guess, it's below 200,000. I mean,
exactly.
I don't think statistically it's valid, but nevertheless, I mean, the degree, it's towards a smaller number.
And a deceleration from last month of 272,000. Blarina, talk to us about the U.S. consumer. There's obviously a lot of discussion about a bifurcated consumer. Those that are long assets, whether it's stocks, bonds, real estate, are kind of benefiting from some higher interest rates, but everybody else, not so much, and inflation is really a problem for a large part of this population. How do you think about the U.S. consumer?
So historically, as a macroeconomist, we look at the consumer in aggregate, but also we have to be aware of the distributions of income and spending and marginal propensity to consume for different types of consumers. At the macro level, I see wealth benefiting households on aggregate because housing wealth and stock market wealth is at historical highs. I also see a strong labor market with very low layoff rates supporting the lower income consumer. And we have a different kind of economy now with gig jobs where people can get hours at a better rate and more easily hours of work than they have done in the past. And I think this does support the lower end consumer. But it doesn't take away from the fact that high inflation has really hit affordability and consumer spending for the lower end.
Blarina, thank you so much. Blarina Rucci with us. She's got those World Series tickets, those Orioles
tickets.
Getting
ready? Oh, she's getting ready early.
Price. I mean, you should see their box.
Boxes.
Blarina, thank you so much. At Camden Yards is well. Paul, I want to get out front of the next hour. We got some good equity coverage coming up in the next hour. And I don't think enough has been said about a bull market. I don't feel out there the exuberance because I think so few people are really in those Mag 7. I mean, I don't know what that feels like. Lisa does. You do. But I just think the whole equity market, David Costin with a great note, Gina Martin Adams has been out front in this too, is there some modeled earnings growth in this quarter?
Yep, there is. I mean, you got earnings growth. I know you like to focus on free cash flow, and the free cash flow, particularly for some of the tech names, is just there in spades. And that's what's different from, obviously, the late 90s going into that 2000 tech meltdown here. But we got some smart equity voices coming on. How about this, Tom? Julian Emanuel, head of equity, derivatives, and quant strategy at Evercore ISI. We got him for 2 segments coming up in the next hour, Tom. And then this fella named Bob Dole, he's had a little bit of experience.
A lot of
this
experience
Wall Street
here. I think it's going to be really valuable. That's what we're trying to do here at Bloomberg Surveillance. We are mid-year, and for all of us on our team, there's the 4 of us: Michael Barr, Lisa Mateo, Paul Sweeney, myself. There's a skeleton crew of managers. It's like 4 or 5 people.
Yep.
Our operating staff, led by Rich Truman, is 10, 12 people. And then even for the interns that have been here for 3 weeks, 3, 4, 5 interns.
Bring them in, yeah.
There's 5 interns we have?
Sure.
It's 5, I think. The whole staff, we're just absolutely humbled by this experiment we're doing in digital. It is on YouTube, which is a future, to say the least. On YouTube, search Bloomberg Podcasts, subscribe to Bloomberg Podcasts. That's building out every day. She came out of London. I mean, out of nowhere, had a whole bunch of hits. Maybe she was is it Glastonbury? Lisa was there.
Yes.
Lisa was at Glastonbury.
Ellie
Gold. Good morning. Stay with us. Equities, the next hour.
Giving love to the world.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr. Hey, focus, Dow, 44,000. That's what we're going to talk about in this half hour. For the entire half hour, Paul, Julian Emanuel with us with SPX 6,000. I did the math. It's a 7.14 ratio to the Dow. You know, Paul, the Dow Jones Industrial Average.
I've heard of it.
That's what matters here. And we're going to get to Julian in a moment with a optimistic call on free cash flow as well. Futures negative 24, now negative 21. A little bit of a wait. Do you think it's the politics? Do you think it's just the...
There's a lot of that politics
jumble
coming out of the UK, France, the US. There's a lot of geopolitical.
There was a video last night. I'll get it out on Twitter and LinkedIn. I did last night that explains the madness of the two-vote system. I need a video on the American election right now.
I like the snap election concept. That's a good one. Why can't we do that? Why do we have to wait around like 9 months?
I don't. Well, and then President Biden's people are talking about him being nominated virtually and earlier.
Okay.
Then I don't know where that's
politics.
We'll leave balance of power. Joe Matthew, Kayla,
we'll be on top of that.
Up to speed on all that's going on in Washington. From the Interactive Broker Studios, the Bloomberg Business Flash, El Mateo.
You got it. And yeah, we've got red on the screen right now. This is ahead of jobs data that could give some more clues on the outlook for U.S. interest rates. Speaking of rates, more Fed speak. We have the president of the Federal Reserve Bank of Chicago. He said central bankers should start thinking about interest rate cuts. Austin Goolsbee said the economy is on its way to a 2% inflation rate. NASDAQ futures down 0.4%. S&P futures down 0.3%. Dow futures down 0.2%. We have the 2-year yield at 4.73%. That's down 2 basis points. The yield on the 10-year 4.43%, and that's down 3 basis points. Shares of Tesla, well, they're down more than 1.5%. This is ahead of sales data, but it looks like we're just getting into second quarter deliveries for 143,956. That headline just coming across. Yes. And that is higher than the expected 439,302. So those shares still up about 1%. Chinese EV maker BYD sales, they rose to that record after the company reduced prices of its models. So they're starting to reduce prices. And then this interesting, shares of Novo Nordisk, Eli Lilly falling. President Joe Biden demanded price cuts on the popular drugs for diabetes, weight loss. Novo Nordisk ADRs down more than 3%. Eli Lilly down nearly 3%. That's your Bloomberg Business Flash. A lot going on. Tom and Paul.
Lisa Mateo, thank you so much. The coolest thing about Braves baseball is a shot from center field. And on the pitcher's mound, they're making revenue everywhere they can. Emory University of Atlanta.
Smart.
They're on the pitcher's mound, sponsoring. A victim out of the Emory University, Julian Emanuel, joins us right now. What was it like at Emory in Atlanta? Did you cut class and go out to Braves ball?
Well, we certainly went to the old Fulton County Stadium in the days when there were 5,000 people in the stands, and you could sit right down.
Jane Fonda.
You could sit right down next to Ted Turner and Jane Fonda.
Wonderful to have you here. You have the honor. You have the coolest equity job on the planet to hang with Ed Hyman every day at Evercore ISI. Is your shop and Ed linking into your work in equities? Are you sub 2% real GDP forward?
Well, look, so Ed has been on the inflation slowing more than anticipated for over a year.
Way out.
And he's on the economy is going to slow more than anticipated towards the end of the year and into 2025. And so, when you put that all together, the conclusion is pretty obvious with regard to what the trajectory
dampened
looks
economics, dampened nominal GDP. Why do stocks go up if the economy's slower?
So there are a lot of moving parts at this point. And the first is that there's lots and lots of liquidity out there. No surprise to anyone, whether it's corporate America throwing off, as you sort of referenced, huge amounts of free cash flow. Obviously, we know where that's centered, whether it's, households really flush with cash still, And frankly, there's this idea that the Fed will, not necessarily when and the degree to which they're going to cut, although we certainly heard this morning that the story get reiterated, but that they're actually going to do the right thing. So if inflation stays sticky for a number of more months, they'll be patient. If the economy starts to turn down, they will be less patient. Mistakes will not be made. Roll that all into the enthusiasm around AI and the potential for what we've seen as high multiple regimes can stay elevated.
Yeah.
And you have a market that continues to rally.
Paul, Lisa did such a good job with that, data check, the Bloomberg Business Flash. Tesla 209, make it 210, is up $9, $219.
There you go. Okay, very good. Our good
I only
friends
did
Tesla.
that for Lisa.
Here's some nice round numbers for you, Tom. Mr. Emanuel here, he raised his year-end 24 S&P 500 price target to 6,000 from 47.50, and maybe saying 7,000 by year-end 2025. Those are numbers you can sink your teeth into. Mm-hmm. What's driving that, Ed?
So really what this was is some introspection on our parts, because it's very difficult to sort of set aside the valuation discipline, because when you look at the long sweep of history, buying low and, perhaps trimming high has been a pretty robust strategy to complement buy and hold. But what we found, and we have been proponents of AI underpinning the broader equity market for well over a year. I think we were pretty early to that party. We think it's still very early on in this theme, is that these high valuation regimes can persist, and valuation alone is not a reason to sell stocks. And when we look at the barbells, right, the probability of recession, the economy deteriorating, materially in the near term, we don't see it. And then the probability of a bubble inflating, we certainly don't see at this point. We're a long way from that.
How much of that's significant? I'm talking a 25% increase in your 24 price target. You don't see that on the street today. You see other banks raising it by 200, just slightly, 3 or 4 or 5%. How much of that was earnings? How much of that was expectation of Fed cutting? What was kind of the drivers there?
So it was really a mix of all of it, okay? And again, I go back to what I said earlier. Our confidence is whatever the right thing to do, the Fed is likely going to do the right thing, and that explains why we started the year at 6.5 cuts priced in and came down to here where basically we're at 1.5, and stocks have not faltered materially during that time. Right. We increased our earnings with the idea that even if a downturn hits later this year or early next, you still are in a robust cycle.
So to your people at Evercore ISI, sector by sector, you're the overall strategist in that. When you look at the big tech companies, is the risk a revenue shortfall? Is that really the sweat out there about the Magnificent Seven maintaining the excellence of 30 multiples?
Well, so you hit the nail on the head on this, Tom. If we'd been having this conversation 4 or 5 years ago, the idea that a large cap technology stock could persistently trade at 30 times would have been...
It was foolish.
Foolish.
Why is it now not? This is critical.
Essentially because there's a view, and we share it, that the way the economy is developing, the way technology is developing, is that you're going to have revenue underpinnings. And the other part of that is, if you think about it, right, you go back to late 2022, when several of the Magnificent Seven basically disclosed that, yes, they could in fact cut costs because they were stockpiling labor. The fact is that corporate America has been getting ready for a recession that fortunately hasn't arrived yet for a year and a half, almost 2 years.
What a joy. We have to come back. Julian Emanuel with us with Evercore ISI to talk about the courage to be in this market. Now it's a courage to go to the news.
Oh, yeah, every time.
It's a brave moment.
Every time.
With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Biden is denouncing the Supreme Court decision on presidential immunity. The Biden White House and the Biden campaign are still furiously trying to dig out of a hole that was created by the president's debate performance on Thursday. During a TV address last night, Biden delivered a very sternly worded speech to try to assure the American people that he has the vigor to not only run for re-election in November, but to serve another 4 years. Biden warns that yesterday's Supreme Court ruling granting presidents broad immunity from prosecution would make an unchecked Donald Trump more emboldened to do whatever he wants if he regains the White House.
Now the man who sent that mob to the U.S. Capitol is facing potential criminal conviction for what happened that day. And the American people deserve to have an answer in the courts before the upcoming election.
Bloomberg's Kevin Whitelaw has more on President Biden's speech last night.
Well, I think it's probably the only play he has, and it was probably always his best play, frankly, is essentially making this into an anti-Trump versus Trump kind of performance. I do think that, we've seen that in 2020, the anti-Trump vote was a very motivated vote and could well be again.
Bloomberg's Kevin Whitelaw. Meanwhile, Donald Trump's lawyers have sent a letter to the Manhattan judge in his hush money criminal case seeking permission to file a motion to set aside the verdict. Hurricane Beryl is roaring across the Caribbean Sea as a monstrous Category 5 storm on a path that would take it near Jamaica and the Cayman Islands after making landfall in the southeast Caribbean and killing at least 2 people. A hurricane warning is in effect for Jamaica. Beryl is the latest Category 5 storm, but it is the earliest to form ever in the Atlantic. Global news, 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul Sweeney, we get some hedge fund numbers. Ken Griffin's building a building on Park Avenue. Is he? Yeah, he's like,
Jamie Dimon.
It's like the thing to do. Maybe we should do one. As we'll call it the Mateo Building. And the returns are coming in. The Citadel Tactical Trading Fund up 2.x% in June. Their year gain is 13.7%.
Okay.
Which I guess is okay.
That's pretty darn good.
It's tactical.
Yeah.
And I'm looking here, and this is through July 1. It's a little bit off. Year to date, SPX up 15%.
Mm-hmm.
So they did like the index.
Yeah.
I don't know if Ken Griffin feels good or bad about that. Mr. Griffin, if you're listening, we'd love to have you on to talk about this.
So you're paying 2 and 20 to get the index.
To get the index. I mean, over 6 months, granted, it's not a long period, and others are underperforming that. I picked a good number there.
I know. I mean, that's a good performance for a hedge fund. Yeah. I mean, I don't get it, but I haven't gotten the long-short equity hedge fund story since 2004, quite frankly.
Yeah, thank to our hedge fund team for getting that out. They'll start coming in here, and we'll see. We'll see how the hedge funds are doing. Millennium gains 6.9% year to date. So that's like 600, 700, 800 beeps below the S&P
But you're hedged.
index.
You're getting hedged.
You're
so
hedged. Thank you.
They're taking out some of the risk in the market.
Oh, I feel better already.
Yep, there you go. I don't get it.
Julian's going.
I don't get the allocation.
Ed Hyman said, put a cork in my mouth when we talk about this. We're going to come back with Julian Emanuel here and talk equity markets unhedged, as they say. Futures improved now, -10 from -20 from New York City. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still falling. We have NASDAQ, Dow, and S&P futures all down about 0.3%. We have the 2-year yield at 4.73%. That's down 2 basis points. The yield on the 10-year at 4.43%, and that's down about 3 basis points. We have spot gold lower, $2,327 an ounce. Brent crude, $87 a barrel. WTI crude at $84 a barrel. We have shares of Moderna. They're up about 0.5%. The company secured nearly $200 million from the U.S. government to speed up development of this vaccine as bird flu threat that's starting to increase nationwide. And then Airbus, they won a deal worth $24 billion from Cebu Pacific for 152 single-aisle jets. And finally, a customer uprising at Costco. Yes, Business Insider says they're not happy with the packaging of the popular $4.99 rotisserie chickens. They moved from plastic trays to plastic bags. Costco says the change is going to save about 17 million pounds of plastic a year. So there's a reason behind the madness. That is your Bloomberg Business Flash. Tom and Paul.
We go to surveillance. Big box reporter Lisa Mateo here. So you walk in the store. I'm afraid to ask, where is the organic rotisserie chicken?
They're back in the poultry meat section, and they're all displayed. It's under $5. It's $4.99.
How many do you buy? How many birds do you buy at a time?
I buy probably 2, and that could last me like a pretty good time. And then you can take some, you can freeze them if you want. Sorry, I'm going way too deep into this.
The birds are
You've got the refrigerator in the garage, right?
I do. I have the extra deep freezer.
She's got a freezer in her daughter's bedroom.
Exactly. That's again that Mateo household. You can have a TV show about
Lisa
that.
Mateo, she threatens to one day take me to Costco. That would be a scary idea. We are with Julian Emanuel, Bob Dahl coming up here. It's an equity hour here, which we like. Futures improve. They're negative 25 now, negative 19. Tesla with a lift why don't you bring in Mr. Julian Emanuel on the markets?
So, Julian, Tom and I are still trying to wrap our heads around AI. What is it? I guess we stop there. What is it? But anyway, how do we get exposure to it? Do we just buy NVIDIA? How are you talking to your clients about AI and maybe how to get exposure to it over time?
So what we think is important, because again, it's very difficult to buy stocks that have moved several 100% psychologically if you don't have a core position. We think you should have a core position in those kinds of stocks. But when you look at it, right, there's a number of companies that are proactively building competitive moats, both on the cost reduction side, which we all know that will be part of the story as jobs transform, but also importantly on the customer interaction, retention, loyalty side. And these types of companies are very upfront about talking about it in their quarterly earnings calls. And that's probably the most important thing that we as investors can do is listen to what they say about AI on the earnings calls. Those are the companies that you want to be thinking about
what's
long-term.
so important here, Julian, and this goes back to the great work of Ed Yardeni, and I'm calling this bull market the Yardeni-Acampora bull market. Ed Hyman will know who both those people are. But the answer is this goes back to the optimism to participate in the market, a la what C.J. Lawrence did years ago and what you do at Evercore and Evercore ISI is I want you to speak to people under the siren call. Barry Ritholtz has been on fire on this.
Yep.
The siren call of trying to time the market. Please, you and Ed, you gotta play if you want to win.
My 93-year-old father-in-law recently departed, lived a great life, basically was in stocks until the end, as much as in stocks as he could possibly, because he believed that when you look at it, and the data supports this, through economic cycles, through political turmoil, through geopolitics, wars, all of these things, that stocks are the long-term income-producing asset. And frankly, when you think about the things that we're trying to hedge, inflation, Again, some of these uncertainties. The other fact is that if you look at it, the price chart of the S&P 500 mirrors the growth in earnings. And if you're going to get long-term earnings growth, which we do believe in fundamentally, you must be in stocks.
Paul, can you, a year before, I would probably quit, but I mean, the surveillance casket, folks, is out back. Paul, can you see me doing this show?
Oh, yes.
At 91
Yeah,
years old?
I absolutely can.
And
No question
the
about
Dow
it.
Jones Industrial Average.
Exactly. No problem there.
100,000.
So, Julian, all right, do I have to be, I mean, tech has led this market for 25 years. You have to be in tech, don't you?
You do.
You have to. I mean, and it's almost like you throw out the valuation. I hate to say that, but how else do you play it?
So we talked about this earlier. There will come a time, that time is not now, when trimming a position in technology and communication services, which are the only two sectors outperforming the S&P 500 this year. And you would think that on balance, that would be a negative statement about the market. It is not, looking out on a 12-month basis.
We just got some hedge fund results, and they're like Citadel seems like they're getting it done, and there's others as well. And I mean, the Mets are playing better, so 0.72 must be doing okay. and the answer is, Julian, is these are fee-based, a point, 2 points, 2 and 20, whatever the math is. I'm looking at a blended fund skewed to high tech. I'm going to leave the name out of it, and their fee is 0.33%. Running billions of dollars. I mean, I'm sorry, the fees add up, don't they, to your equity return, particularly when dividends are reinvested.
They do. Look, Jack Bogle's entire career was built on that concept, Tom, founding Vanguard, and fees do add up. But what I would say about that is, again, there are times in our lives when diversifying away from stocks in a portfolio where stocks are the bedrock actually allows you to buy more stock into weakness. And frankly, a hedge fund that does well in all weathers of market, there are certainly a number of them out there. That's part of a prudently built portfolio as well. And there are a number of managers that have justified decades of that kind of fee structure.
What is your quantitative strategy team telling you?
So interestingly enough, and if you think about it, this is going to make sense. The last week, we've certainly seen, let's say politely, a good deal more political volatility. And when you think about how the second half of the year is likely to get underway, what we found is that the valuation factor, buying cheaper relatively stocks among sectors versus being underweight the more expensive stocks, actually hasn't worked. And that's not just a large cap tech concept. This is across all sectors. Our view is that when you think about in committing more capital to stocks right now, you're probably going to be more inclined to be more valuation sensitive, considering that there's more political risk out there than normal.
Julian, thank you so much. This has been great.
Pleasure.
Really appreciate it here. The mystery, this is perfectly timed, the whole mystery into the earnings season.
Yep.
We get the banks.
We'll get the banks coming up.
We get the others. We get the techs. Minnesota Mining will show up. And
yep.
Culp got re-signed at GE today. I saw that. Yeah,
okay.
Lisa, you had that, right? Mr. Culp?
Yes.
Re-signed at General Select. He was going to go to Boeing.
He was going to, right.
Yeah, middle relief.
Boeing could use, I don't know who
takes on. Did they bring Alan Mullally back?
Yeah, that's a tough job, boy. Wow. Yeah. All the regulators.
It's going to be interesting to see, and it unfolds into the second half. We'll have that coverage, of course. Backing us is all the reporting of Bloomberg News. Thank you, Catherine Doherty, for the CFA essay that we got out on level 2 passing here. Futures, the tape's a little bit better. I mean, actually, small stocks, a little bit of green on the screen. Good morning, Lori Calvasine. And she catches up here. She's lifted up her estimate here of what Standard & Poor's will do. We need to get the markets open. We just saw with the Sweeney yield, the 2-year yield, 4.73%. From New York City on YouTube, on Apple CarPlay, and Android Auto, Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. Now, we are just a half hour away from more jobs numbers. Bloomberg Economics says the May JOLTS report may show a further decline in job openings. This all comes ahead of Friday's jobs report. Traders also waiting words from Jay Powell on the Fed's next steps. All right, so let's see how the markets react ahead of this on this holiday-shortened week. We get to the S&P 500 down about 0.3%, 16 points at 5,458. The Dow down 0.1% at 75 points, 39,099. And the NASDAQ down 0.4%, 75 points at 17,804. We have the two-year yield at 4.73%. That's down 2 basis points. The yield on the 10-year 4.23%, and that's down 3 basis points. We have spot gold lower, 2,327 an ounce. Brent crude $87 a barrel. WTI crude $83 a barrel. At the open, also want to check in with shares of Tesla. They're taking a turn up higher, up now more than 4.5%. Second quarter deliveries had a less dramatic drop in vehicle sales than expected. It delivered 443,956 last quarter. That is your Bloomberg opening bell report. Tom and Paul.
Lisa, thanks so much. This is a joy. Great planning here. Eric, just a terrific job here. Julian Emanuel with us, and now someone even more grizzled. I mean, can you get someone more grizzled? It's
pretty
Julian
grizzled.
Emanuel.
Yeah.
More grizzled. Robert Dahl joins us, CIO Crossmark Global Investments, with a few years of experience. Bob, I understand that when you were at Lehigh University, things were historically unique, like there was July and winter,
exactly.
Sort of what there was at Lehigh. In your research note, you say our economics has been unique. Discuss and fold that into what it means for the stock market.
Sure. Thanks, Tom. I think it starts from COVID. COVID just threw so many typical patterns off their normal course, and that's confused so many of us. For example, all the excess savings saved us from an economic slowdown, if not a recession, last year. That's just one example. So the models that people use are causing them to scratch their head because they're just not working. And I think there's more of that to come. I think there's a false sense of security out there that everything's just fine. I mean, look, when the market's selling over 20 times earnings, things better be close to perfect, right? And they're not. The economy is slowing. Inflation, while probably going to come down some more, is stubborn, sticky. It's not going to get to the 2% Fed target. And you've got these double-digit earnings expectations for this year and next year. I can't square all those very positive circles and come up with a reason why at 5,500 I got to jump in with both feet. So I'm a little on the cautious side, fully invested, but really careful about what I own. You got to own, you've heard me say this before, Tom, earnings predictability, earnings consistency, and good, strong cash flow.
Hey, Bob, a lot of folks, I think, are concerned about the lack of breadth in this marketplace. Torsten Slok over at Apollo was out with a note a couple days ago saying that the Magnificent Seven are, they represent 35% of the market cap here of the S&P 500, but only 23% of the earnings here. How is that concentration risk? How does that sit with you?
First of all, a little factoid. Second quarter just ended. S&P was up 4%. The average S&P stock was down 3%. So was that a good quarter? I'm not sure. That divergence is clearly worth pointing out. Historically, when markets get narrower and narrower, the end game is not good news. So the market's got to broaden out, or we're going to have some sort of pullback. Now, to take the other side of the story for a half a second, the numbers you just gave are nowhere near as stretched as they were in the year 2000 in the tech bubble. I mean, the companies that we're talking about, they have revenues, they have earnings, they have cash flow. Back then it was, price to clicks and eyeballs and all that good thing. So I'm not going to argue we're setting ourselves up for that, but right. You're right, there's some extended patterns.
Bob, discuss with us of this phrase, a well-diversified portfolio. I'm looking at major funds bringing in tons of retail money because they own 6 stocks. I'm kidding, folks. But these, there was, remember Fidelity 50, Joe Miraso had 50 stocks like Sequoia, Paul.
Yeah.
What's the dull diversification in the equity market now for mere mortals?
So I come back to, we are in a momentum-driven market. And I've learned the hard way over the decades, do not stand in front of the momentum freight train because it can run you over and do a lot of damage. You've got to participate. So you have to have some of the Magnificent Seven. You have to own them all, but you have to have a good representation because that's where the action is until it isn't anymore. And predicting that is a fool's game. But then you got to round it out with other things in the portfolio that if we have a sell-off, we'll go down less. Or if the market continues to go higher, you're buying cheaper stocks with good fundamentals. Have a healthcare name or two, even a staples name or two to complement your financials and your energy. And yes, those big tech stocks, have them too.
Bob, how about in fixed income? Can I just sit around in my 2-year treasury at 4.73%, or should I go out there and take some credit risk?
I am going to talk out of both sides of my mouth. I would have a barbell approach. That 473 or whatever the number is isn't going to last forever. We know that. If we're getting set up for a slowdown here, God forbid we have a recession, that 4 handles become a 3 handle and probably a 2 handle. And then you're going to say, now what do I do? So you have to have some out the curve to benefit from the environment where the curve steepens some and maybe rates come down.
I look, Bob, at all the people market timing, and you are, I was busting your chops about being grizzled. The fact is, Bob Dahl, folks, for years has had the courage to be in the market. Is this another time where the market timers have just been completely vanquished? And is there a lesson learned this time around?
In a lot of ways, sadly, that's the case. As you hear me talking, you can hear I'm cautious, but I'm quick to point out for my clients, I'm fully invested. Just be careful what it is that you own. Market timing, we all know it's a really, really tough game. At the margin, you can do some asset allocation and, when they're down, buy some, when they're up, trim some away. That's the best kind of market timing rather than trying to be some sort of hero.
So remind us what we do when the market goes down 10% and leases.
Yeah, we buy a few stocks. My beta is slowly but surely coming down. My economic sensitivity is coming down. I think we're going to see a slowdown. But if we get a down 10%, I know some of those higher beta, more economic sensitive names are going to be down 15 and 20%, and that's what I want to turn around.
So what do you do when you go down 10%? Do you buy quality, or do you go out and buy the garbage that's down a lot more?
Well, at the bottom, not that down 10 would be the bottom, but when we get a bottom, we'll know it after the fact, obviously. You want a low-quality portfolio because when we come out of whatever mess we might get ourselves into, the other side is always led by the junkier, lower-quality names.
Like
Not
Apple.
the point to have now, but that's when we'll want to get there.
Compared to NVIDIA and Microsoft, like Apple, it's lagging.
Exactly.
Bob Dahl, thank you so much. Greatly appreciate it.
All the best.
This has been great, folks. Julian Emanuel back-to-back with Bob Dahl. Eric, it's great job on this. Smart. People ask, who books the show? I say, well, Lisa books it in her free time.
Yeah.
But we got a whole team that does it, led by Eric Mulla, and he's, they're killing it.
They are? They're not resting on the laurels.
Did you know that Lisa has a hat trick of freezers in her house?
I know. She's got the one in the garage. That's when you know you're serious.
You have to. Yeah, that's how you save money. You buy in bulk and you just freeze it.
So when you bring home $1 zillion of product from Costco,
yes,
and the freezers are open, and then you close the doors to Staten Island, brown out, what's your electric bill if you have 3 ginormous freezers?
I didn't think about it that way. Now that you put it
Con Ed's like, well, thank you, Lisa. We appreciate that.
Exactly.
Thanks.
Critically here, folks, the tape does better than futures did earlier. We were negative 24. Right now, negative 8 on the Dow. With our news in New York City, Michael Barnes.
Thank you very much, Tom, Paul, Lisa. Hurricane Beryl is now a Category 5 storm in the Caribbean. Reports of deaths in Grenada and St. Vincent. Beryl now threatens Jamaica with at least $1 billion in losses and damage as it brings dangerous storm surges, high winds, and flooding rains. Some of the latest computer models show Beryl turning farther north, and that would make late weekend into early next week a problem for the coast of Texas. President Joe Biden warns that yesterday's Supreme Court ruling granting presidents broad immunity from prosecution would make an unchecked Donald Trump more emboldened to do whatever he wants if he regains the White House.
This is a fundamentally new principle, and it's a dangerous precedent because the power of the office will no longer be constrained by the law, even including the Supreme Court of the United States.
Biden, after last week's rough debate performance, signaled he had no intention of dropping out of the race during a TV address. The Democratic National Committee is considering formally nominating Joe Biden as early as mid-July. Bloomberg's Amy Morris reports from Washington.
The strategy is to ensure that President Biden is on November ballots and stamp out any intra-party chatter of replacing Biden after last week's poor debate performance. A potential date for Biden's nomination is July 21st, when the Democratic Convention's Credentials Committee meets virtually. That's according to people familiar with the matter who spoke on condition of anonymity. The panel is meeting to finalize procedures before the party's convention in Chicago starts August 19th. In Washington, Amy Morris, Bloomberg Radio.
Finally, good news if you're flying out of New Jersey's Newark Liberty International Airport. Flights are back to normal after they had to be slowed Monday evening. The FAA says it was because of an air traffic controller shortage. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg Tom, Paul, Lisa.
Michael Barr, thanks so much. We go to our surveillance Terminal A correspondent, Paul Sweeney here. On Newark, a 2-hour delay at Newark, serious, because there's already a 1-hour delay just built in.
Yeah, exactly. So you're getting into that time of the season time when the volume is just picking up, and I'm sure the whole air system in general is strained because we keep hearing from some of the airlines how they're cutting back on their service due to a variety of reasons, not the lack of which is a lack of airplanes.
Newark, folks, for those of you worldwide and across the nation, you know, I think of Denver. There's like it's like five. It's huge.
Yes,
it's
exactly.
ginormous. Newark is like you're on an aircraft carrier next to the Garden State Parkway, and there's 15 planes queued on 2 runways.
Yep.
And they go off like clockwork every 30 seconds, and they can't keep up.
No, they can't keep up. But it's interesting. They've got the Terminal A, which was closed for renovation, opened recently, and it is spectacular. I have to really give them credit. Terminal B is now closed for the same thing. We'll see how that comes out. So they also have some terminal capacity issues there.
So Terminal B, they're rebuilding like the magic of what they did with Terminal A.
Yep, absolutely. So that'll be good. Because that's the international terminal, Tom. So when you're flying back on the Gulfstream, and if you come into Newark because you can't get into Teterboro.
No, I take the Gulfstream, Middletown. We go to the Gulfstream is better in Middletown, but 57, 56 United to Paris. I mean, I live on the thing.
I know you do. So yeah, we've been coming back into a nice new international terminal. Yeah.
Are they still going to have the little train that goes around that I took exactly
They do have the little
once?
train. Yep, they do have the little train, and I'm always shocked at how many people park there. So they've got that going.
Afterthought forced me to take it. I'm sitting on this train, and the only one on the train. And I thought, it was like Disneyland in 1955.
Yep, exactly. New Jersey Transit now stops at the airport at Newark Airport.
Do they?
Yeah,
I did not know that.
People coming on the train.
You can take the train from Manhattan to EWR.
Yep. Easy peasy. A couple stops.
This is Michael Barr learning so much.
I know.
Well, and you hit the nail on the head, Paul. It was that. Now, it's one thing if you're flying out of Allentown, Pennsylvania. Now, don't get me wrong. I mean, you have to be qualified for that. But like you said, I mean, those flights are going off at Newark every 30 seconds.
30 seconds, just boom.
Yeah.
It's amazing.
So,
how they do it.
New York airspace.
Okay.
Fun times.
We got to come back. The New York Times is doing a killer job in a congestion tax.
Yeah.
I mean, they're just reporting on it.
It's coming back. We'll talk to John Tucker on that.
We'll talk about it. We got lots to talk about. Red and green in the screen, the tape better than futures earlier this morning. From New York City on YouTube, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
On the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We're seeing a little bit of a move to the markets, red and green on the screen now. This after Fed Chair Jay Powell said prices now showing a disinflation trend. So we have the NASDAQ, get rid of this alarm that's going off my computer here. NASDAQ up about 0.1%. S&P.
One of the freezer doors is
sorry. Things popping up all over my screen. S&P 500, little change. The Dow, little change, but it's down about 13 points. We have the 2-year yield at 4.72%. That's down 3 basis points. The yield on the 10-year, 4.42%, and that's down 4 basis points. So you see this shift. We also have a shift in tech stocks. You have NVIDIA shares down 0.7%. Meta shares down 0.4%. Where you are seeing a lift, that's Tesla shares up 5%. That's after second quarter deliveries had that less dramatic drop than expected. Shares of Paramount, they're higher. They're up 4%. The New York Times reported Barry Diller was considering making a bid. And then you have shares of Novo Nordisk, Eli Lilly. They are lower. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. This is a joy. First of all, Paul, the Tennessee Smokies are playing the Chattanooga Lookouts tonight.
Nice.
And if you're a college president, you know the system, and you know when you're with the University of Tennessee, Knoxville, you got some bolt-ons.
Yep.
And one of them for Randy Boyd is minor league baseball. Randy, forget about Tennessee. We'll talk education in a moment. Tell me about the state of minor league baseball right now.
Well, Tom, that's why I love this show, because you never know where we're going to go with the
Got
questions.
that right.
I love that question. I took my 8-month-old nephew to his first Smokies baseball game, and regarding the Chattanooga Lookouts, we won 7-2 last night. So he brought us some good luck. No, minor league baseball is thriving in the U.S. In fact, I was just at a meeting with Major League Baseball last week in New York, and they pointed out that minor league baseball is the second most viewed sport in all of sports, followed by or behind Major League Baseball. So minor league baseball is doing well. Thanks for asking.
You're underplaying the punchline. UT just won, and folks, this is hugely competitive. The national championship in NCAA baseball.
I know. Awesome.
How'd you do that? Did you stack it with your minor league team, Sean?
Well, unfortunately, I'm not allowed to do that, but we did. It started with hiring a great chancellor who hired a great athletic director who hired an amazing coach who's had just an incredible run over the last 4 years. Number 1 in wins, number 1 in home runs, highest winning percentage, and made it to the College World Series twice, but didn't win a game the first 2 times. This time, won it all. So we couldn't be more excited here at UT.
Hey, Randy, want to talk to you about kind of a narrative that is out there, I would say, about the value of higher education, college education, given the cost, which is so prohibitive for so many families. How do you think, and maybe people are really questioning the value of higher education. How do you respond to that? How do you answer that?
Well, no, I really appreciate that question. And I know I've listened to Tom talk about the value of higher education on his show, which I watch every morning from my treadmill here in Knoxville, Tennessee. But Tom, I'm a huge fan. But when we bring up or questioning the value of higher education, I'll just say that the value depends on which university you choose, and not all universities are the same. I'll speak for public land-grant universities, and specifically the University of Tennessee. But we're a great value. You know, one of the things that people worry about is graduating with too much debt. At the University of Tennessee, 47% of our students graduate with zero debt. That's up from 42% just 5 years ago. And of those that graduate with debt, the average debt is $26,000, which is 4.5% below what it was 5 years ago. So fewer and fewer students are graduating with any debt. Those that do graduate with debt are graduating with less debt. And if they get a degree from the University of Tennessee, or I would say this would be true for any university across the country, there are more jobs requiring a 4-year degree than ever before. In the state of Tennessee, for the last 10 years, the number of jobs that require a 4-year degree is increased by 361,000. So people need, or employers need, the talent that we're producing.
Tell us about the sprawl of Tennessee. I grew up in the land grant cause. This was Texas A&M. It's a small school in College Station. And the first job...
You played baseball too, I think.
My first job, my father's first job, Randy, was at Oak Ridge, Tennessee. Basically, he didn't go to Korea because he was helping the Manhattan Project in Oak Ridge. That's a bolt-on to what you're doing. Tell us about STEM in science and 11% engineering students at UT right now off that heritage of Oak Ridge.
Well, that's a fantastic bit of information. I didn't know that. My grandfather actually worked at Y12 in the boiler room back in that same period of time. So maybe your father, my grandfather, potentially knew each other. But Oak Ridge National Labs happens to be managed by the University of Tennessee. There's 6,500 engineers and scientists, some of the most brilliant in the world, working in Oak Ridge, reporting to the University of Tennessee. But STEM and engineering degrees are a key area in which the University of Tennessee is providing talent for the state, and an area in which we need to increase the number of engineers and talent that we're providing. Our state right now says that it needs 10,000 additional new engineers a year. We're producing about 2,300 a year. And one of our goals over the balance of this decade is to increase that by at least double.
So, Randy, talk to us about what are the kids studying? What are they gravitating to these days? Is it business? Is it technology? Is it engineering? Where are you seeing kind of the student demand?
Yeah, all the above. So I think you just hit on the areas in which more students are gravitating toward business. Our supply chain management, data analytics are extremely popular and in high demand. Engineers of all types are in high demand. We provide we graduate or produce more nuclear engineers and more nuclear PhDs than any other university in the country. So those STEM fields are significant. But one of the things I also want to highlight, because I sometimes worry, and I'm a business guy by background, I think about the positions that our businesses need, our employers in those type of fields need, but also when I talk to folks at the state level, I know with our Department of Mental Health, the commissioner there reminds me that she actually has enough funding to do a lot of the programs that they need, but they need more social workers. So while engineering and STEM is important, we also need to make sure that we're producing teachers and we're producing the social workers that also our society needs.
Randy, to our listeners in 3 zip codes in Manhattan, I mean, everybody's moving to Florida, and they're also moving to your Knoxville, Tennessee. You should see the sidewalks are orange down there. and Randy, can there be too much growth in Knoxville, in Nashville, in Memphis?
Well, there could be too much, but I guess the trick is we got to make sure it's responsible growth. We've got to make sure that we're investing in the infrastructure that we need. And for me, at the University of Tennessee, we've got a very ambitious goal of growing from 59,000 students to 71,000 by the end of the decade. And to do that, we've got to make sure that we're investing proactively in the infrastructure and the buildings and the auxiliary services that our students are going to require to be successful here. So. You can't have too much growth if you don't plan proactively for it, and we're trying to make sure that we do.
This is an honest question. I don't know where these teams are playing. You guys are still in the SEC. The SEC still exists,
good
right?
Question.
I can't keep track.
Randy, what in God's name is going on with Division I and C? Are you in the Big One?
Yeah,
is it the SEC? Randy, fix football.
In the most recent championship of all, I guess we are in the Big One because we're the most recent national champions in any sport. But I would say that Division I athletics is going through a transition. The business model has changed dramatically. There's so much money coming in from big TV revenue, and it's right that the students should get a share of that. And at UT, our focus is just making sure that we keep our students' interests first and making sure we do the best thing for them. I think we'll be doing the best thing for the university. We'll be doing the best things for fans. But we try to be as student-centric as we can.
Be sure the engineering faculty gets their fair share. Mr. Boyd, with the University of Tennessee system. I can't say enough about it. Out of Knoxville, and just
I went to a football game there
tons
once.
Did you?
When I was at Duke, we took a road trip. Phenomenal.
Yeah.
It was like on a Saturday night.
Yeah,
it was
it's
awesome.
like a culture
Yeah,
unto its own. This has been a fabulous show. Stay with us. It's a holiday lengthened work week, which means you got to play Dispatico. This is a great song.
Vamos a hacerlo en una playa en Puerto Rico hasta que las olas griten ay bendito para que mi sello